So, good morning, everyone. My name is Saurabh Jain. I am a full-time investor and trader. Today, I'm going to present about a very simple business. The company is Sanghvi Movers. But please read the disclaimer on this screen at the top hand side. I am not a registered advisor, and I don't have any competence to recommend stocks. So please do your own due diligence before investing. It's your money. You need to take care of it. Yeah. So this company, I believe, is a right idea at a right time. Uh, why do I say so? Because it has all the uh, components or attributes of becoming a multi-bagger, and so it has tailwinds in form of uh, government policy and support in, to infrastructure sector and to wind sector, and this makes a large market available to this company. Two, there are entry barriers in the business. Not everyone can do it. It is a very interesting concept because though the business is very simple, yet not everyone can do it. The In the current, the valuations are comfortable, reasonable. Unlike most of the companies in today's bull market, where the valuations have gone to an extreme levels, this company is still available at reasonable valuations, and this is actually very surprising to me as well. And this sector is a hot sector currently for the in the current bull market. This sector uh, is drawing everyone's interest, and I'm sure most of us would have made money if they had invested in this sector. So this sector that I'm talking about is actually two sectors. One is infrastructure sector. There's a lot of focus by government and stocks have run up. And the second is renewable energy sector. Again, companies in this sector and within renewable, if this company works in the wind energy sector, and all companies in wind energy sector, be it Suzlon or Inox or KPA Energy, everyone has given fantastic returns in this bull market. So let's talk about this business. It's a um, it's a very simple business. As I said, they just buy cranes and gives them on rent. You know, everyone can do it at a conceptual level. You just have to buy, invest, and give it to people who need it for the projects. So it earns around. You can see the picture of cranes. These are very uh, large cranes, very powerful cranes, what the industry calls very heavy cranes. Not everyone has these cranes. You would have seen a lot of cranes around you, but very few people would have seen such large cranes. So they basically, their cost of funds is 9%. So they buy uh, cranes by borrowing money at 9%, and then they rent it out. And when they rent out these cranes, they earn around 2% per month. So which translates into 24% per year. So you are buying at 9%. Your cost of funds is 9%, but you are able to earn 24%. 20% because the utilization of these cranes is around 80% in a year, because cranes need to be moved from one location to another location, depending on the project, and so there is a time for maintenance, there's a time for transit of these trains. So they are able to use maximum around 80-85% capacity, and on that they are able to make around 20%. So borrow at 9%, make 20%. Very simple business. So uh, so these cranes, so use when if we see cranes around us, most of these cranes are smaller cranes, but the cranes that Sangvi deals in are large cranes that are used for large infrastructure projects. These include setting up wind power projects, for elevated roads, for railways, for oil and gas projects, for refineries, for cement sector, for power sector, for making large factories, for erecting, say, chimneys, large chimneys on factories. So these are the varied uses. So the good part about being able to cater to so many sectors is that if there is slowdown in one sector, you still have demand in other sectors. So the bottom part represents all the sectors that they cater to: wind, power, refinery, cement, projects, EPC, and the middle image, this one, it gives a distribution of their business across sectors. So, for example, in project EPC, they have a very small allocation. In power sector, they and four sectors: power, refineries, uh, steel and metal and cement. Across these four sectors, they around make around 10%. They derive around 10% of their business across each of these sectors. And this part is very interesting. This is the windmill part. They derive around 50% of their revenues from this sector, and the contribution from this sector is increasing. As you can see, Q2 last year, it was around 40%, and it has increased to around 50% this quarter. We'll talk about this as well. So Sangvi Movers is Asia's largest crane rental company. It is also world's sixth largest rental company. So it is a market leader in a niche industry. And crane rental Um, and sorry, there is a word missing here. It's infrastructure. Infra construction equipment industry has grown at 25% growth last year, which also is corroborated by the fact that wind power sector and the infrastructure sector are growing. And so to cater to this, infrastructure construction equipment industry will have demand, and this demand was 25% growth last year. And this infrastructure construction equipment industry is very crucial for infrastructure development, because as the country develops, the infrastructure development has to grow. So it is a must industry. It is not an optional industry that there is a problem and people will cut down immediately on this, because in once infrastructure projects have started, they need to be uh, completed. So there will be a constant demand once the sector picks up, which it has picked up in last few years. And being the largest company, it commands 45% market share in overall Indian crane market. So overall Indian crane market is divided into organized sector, unorganized sector. Within organized and unorganized, there are small cranes, there are large cranes. So overall, across small and large cranes, it has 45% market share. But the focus area of Sangvi, which is large cranes, which is represented by greater than 400 metric ton cranes, it has a 60 to 65% market share. So two-thirds of the market has been captured by a single company. Sangvi Movers was founded in 1989 by the father of the current promoter, and it has seen multiple business cycles and grown over last 35 years. So it has seen the good times, it has seen the difficult times, it has again seen the good times, and it has survived all of these phases. So the risk of it going bust is very minimal. It is headed by second generation promoter Rishi Sanghvi, a very dynamic young person. He's done his MBA from Cornell School of Management in US, and he has brought some interesting changes in the company that we are going to look at in next few slides. These are some of the clients of Sangvi Movers. So in wind sector, we can see first Adani Renewables. Then at the bottom you can see Suzlon, Siemens Gamesa, Semcorp. It's a renewable energy developer. So it has very reputed clients in wind sector. Similarly, in cement sector, you can see Ambuja Cement. We can see Shree Cement, Ultratech. So in metals, Tata Steel. Uh, so very L&T in construction. So it works with who's who of their target client segment. So now we have seen that this company is in a niche. It is a leader. It has reputed clients. But let's talk about why it will grow. It will grow simply because the opportunity size is huge and it is growing. Last year, 23-24 current financial year, the infra budget in was 10 lakh crore. So by 2030, maybe it will be 70 to 100 lakh crores approximately. Investment in power is going to this is besides the infra budget is going to be around 100 lakh crore by 2030. Investment in railways will be around 10 lakh crore by 2030. There will be more investments in industrial segment. So I don't know the numbers there, but what we are talking about is huge numbers, which presents a huge market opportunity to this company. And whenever you have huge large opportunity available for a sector, the market leaders tend to do better than others, and we have seen that Sanghvi has 45 to 65% market share in this segment. Now, you know the opportunity is there. They have done it in past. Why will this opportunity come to it? Don't take my word for it. Let us look at some facts. It is the largest organized player. No one becomes the largest player in organized market just by fluke. There has to be some competencies, some capabilities, some entry barriers. So I'm sure these are present. That's the reason they have become the largest player. For wind sector specifically, across organized and unorganized, they are the largest player. The wind sector projects require very large cranes with ability to handle a lot of weight and also height. So uh, the competition has not invested in this sector, in these type of cranes, due to the cyclical nature of wind industry, and there was troubles in the sector in recent past. So they who whatever two or three organized sector peers were there or competitors were there, they have also faced problems, and they have moved out of this industry, leaving this sector open to Sangvi movers. It is a preferred company in the past. We have around India has around 43 gigawatt of installed wind capacity, and 25% of it has been done by Sangvi in the past, and now it is gaining, in terms of market share in incremental capacity, the market share is even higher. It has a long-term order book. The what the way it works is whenever a company wants to hire cranes, they have to plan the project in advance, and they have to place orders at least 2 3 quarters in advance to this company Sangvi Movers. So they have a long term order book based on visibility of the projects. uh, and some of the clients are repeat clients. For example, wind companies like Suzlon or Gamesa or Siemens, these are repeated. They have long-term relations with the client for several decades, uh, and these companies trust Sangvi movers for repeat business. And so initially in the presentation I talked about it's a simple business, but it's not very easy to operate. uh, they have 500 plus trained crane operators. Now, not everyone can operate such large cranes. There a lot of specialized training goes into it, because you are handling very valuable, uh, very heavyweight equipments. So imagine if a crane drops a large wind turbine, it can lead to damages of several crores, uh, because of the damage, because of the delays in execution. It will lead to harm to their reputation and long-term business prospects. So it has to be done very carefully, and you need highly trained crane operators. So Sanghvi has the largest pool of highly trained crane operators. So all these factors make me believe that they have right to win, right to capture this opportunity going forward. Look at some growth numbers. Uh, the 10-year growth has been very less, 3% and 10%. So what has happened is company grew very well in the past. Then it was dependent highly on wind sector, and due to some policy regulations, the wind sector went down. So the company didn't do well for 4 5 years. So this led to a lower abysmal 10-year CAGR number, but company has again picked up steam. It has diversified from wind sector to infrastructure sector. So now it has 50% from wind, 50 from infra. So and both infra and wind are fortunately growing. So we can see this has led to improving growth rates. And last year TTM growth sales is 35%. Similarly, profits have grown and profits. So while sales has grown by say 3% CAG, 12% CAGR for the last 3 years, profits have grown by 129%. Well, sales have grown by 35%, profits have grown by three times. So this indicates that profits are growing faster than sales. It indicates demand, and because of demand, they are able to sell at higher margins. Uh, the market has also rewarded this company for the growth. The share price has grown by 127%, but the share price has grown by 127% from a depressed level because of the 4 5 year trouble faced by the wind industry. So still, even after 127% growth in last 1 year, I believe the share price is not valued expensively. uh, we have talked about this. They receive orders few quarters before the execution, so this gives them visibility. Current order book as on October last quarter results was 522 crores. Subsequently, more orders have been received. And if you look at H1 revenue comparison, last year their full year revenue was 450 crores, but in just H1, half of the year, they have done more than 50% of this 450 crores. And management has also confirmed that the order book is looking very healthy at this moment. This is a very interesting point. Who declines orders? They had to decline few orders because they are running full, their order book is running full, they have a very high crane utilization. So they have declined low margin orders, and they have taken orders that were giving them better margins. These are some checks that I consider very important uh, to ensure that the balance sheet is not fudged, the profits are not fudged. So a company pays dividends only from real profits, not from paper profits of fudged balance sheets or fudged P&L accounts. It every year, every single year, when the company has made profits, it has paid around 15% as dividends. No one pays tax to government if there are no real profits. So they have consistently paid around 25% of their uh, profits as tax, which is in line with the current tax regulation in the country. N- you can register a sale. It can be a dummy sale. So what matters is whether you have realized money from that sale. So the CFO represents cash flow from operations. It has to be higher than PAT. So if you look at PAT for 10 years, it is around 207 crores, and they have realized more than 1900 crores uh, in cash flows. The last point is something, or the only thing, but it is a kind of a worry for me that institutional or marquee investors, the big names like Vijay Kedia or Ashish Kacholia, no marquee investors have built positions. No institutionals are increasing the stake in spite of the clear visibility in the sector, clear order books, reasonable valuation, the sector in demand. I fail to understand why no one is increasing stakes here. Now, this is a very, very important, or I think the most important slide. So far, what we have understood is this is a good company, there is a demand, this will grow. But this can help company grow and the stock price become, increase and compound at some rate. So company increases by 20%, stock price may also increase by 20%. But I am not, personally, I am not interested in compounding stocks that will grow the money slowly. I am interested in potential multi-baggers. So this slide has all the points which I believe it can make it a multi-bagger. So the first point is the core crane rental business is capex heavy. You have to invest in cranes and you are running at maximum 85% capacity. Now, if you want to grow your revenues and profits, you have to buy more cranes. So you need continuous capex to grow. The company has been making continuous capex, but there's a limit to uh, have incremental capex. But what if there's a policy change? What if there is some other risk that comes and company has burnt its hands in the past? So they cannot make infinite capex. So uh, they have a capex policy in place depending on their ability to service interest, and they wanted to keep it very, very comfortable. They don't want to become highly leveraged. So they can grow by their regular capex, but to a certain limit because they cannot utilize more than 85% capacity. So what they've done is they've increased their scope of work by taking up EPC projects where cranes are deployed. So, for example, they have a contract for renting out cranes to a wind power project. What they are saying now is, besides just giving you the rentals, let me also do EPC for these projects where I take care of transport of these turbines, handling these turbine parts within the area of the project, building the base or foundation, concrete foundation of the project, building the transmission line for the projects. So they have taken up peripheral activities for building a project. Similarly, not just for wind projects, they have taken up EPC for other projects as well. Uh, so this is very interesting because they are not diversifying. It's a synergy with their core business. For EPC, it will help them to increase their ROE and ROC. It will help in faster scale up in revenues and profit. And this is not dependent on capex, additional capex, and this is core to their business. They don't have to hunt new clients. Wherever they are renting out clients, they have a relationship. They have to offer their EPC service, and it leads to easier mobilizations at sites. You don't have to be, doing mobilization at a different place for crane rentals, at a different place for EPC. At the same location project site, they're able to mobilize manpower and equipment. So I think this is my main thesis of this business. Scalability, this EPC is scalable. It will add to their ROEs. They started with one EPC order of 6 megawatt in wind, and now they have received a single EPC order for 300 megawatt wind project. The value of this 300 megawatt contract that they have received is 166 crores. Out of that 166 crores, 110 crores is for EPC. The remaining 56 crore is for crane rentals. So whatever they were making from a single order, they have done 3x revenue from the same projects by offering adjacent services. The last To put this in perspective, last year their annual revenues were 450 crores. Now they have a single order of 166 crores, uh, out of which, as I said, 110 crore is for EPC over 2 years, over next 2 years. Now let us understand from another perspective. If they had to do 110 crores, this 110 crores from crane rentals over 2 years, they would have had to make 220 crores of investment. Now, in EPC, there will be hardly any capex. and minimal OPEX to generate similar kind of revenue from crane rentals. So this will boost their ROEs significantly. I'll just go back to the earlier slide. No, I have not captured uh, ROEs here, but this will boost their ROEs significantly. So what I've understood is for a company to grow, for the stock price to recognize and appreciate the business, you need good ROEs and you need good growth. So so far the company was doing good growth, but ROEs were decent, not fancy. But now you will have both good growth and good ROC, good ROE. So that I think will can has the potential to make this company a multi-bagger. Uh, there are tailwinds for EPC. And so, what are the tailwinds? We have talked about the government policy to grow the wind business, but within that, there is a nuance. The market leader is Suzlon. So far, it was doing complete things, selling turbines plus doing EPC. Now, Suzlon is focusing more on selling turbines. It is moving away from EPC business. So that is additional tailwind uh, for this company. Um, if you have been actively involved in the market, you would have noticed that there's a company called KP Energy. It does EPC, and they have done phenomenally well, both in terms of business and stock price. And there's no reason that so Sanghvi movers will not be able to do similar. I think Sanghvi movers is more capable. It has more capabilities than KP Energy, and it can do much better. Just that I'm surprised why the market has not rewarded it as much as it has rewarded KP Energy. Uh, but I think there is a possibility that market will take note of it, and the stock can give wonderful returns. Um, so we have talked about this for others, not just wind, for other sectors also. Infrastructure is growing, and the company has a policy that they will take up EPC only when the cranes business is around one third to 50% of the overall contract value. And the benefit is, they have a bargaining power. They have declined cranes to some projects earlier because they were running full. So now they can say that, I can give you cranes only if you can give me EPC as well. So they also have a bargaining power. Let's look at charts. These charts are do not capture the last 2 3 days of price movement. On a weekly time frame, it gave a nice flag breakout. The breakout was also strong here, this candle, and then it came to retest the breakout. And there has been sufficient weeks of consolidation, and we know in stock market the aggressive price moves come after consolidation. So the stock has been consolidating on a weekly time frame. On a daily time frame, after this flag breakout on weekly time frame, the price has come back to retest it and bounced. It has bounced one, two, three, 4 times. So that indicates that at this retest level there is a demand. Again, look at from 50-day EMA perspective. It has respected this 4 times. It has bounced back every time it has come back. So I continue to believe that there is accumulation going on because the stock is bouncing continuously from all retest and 50-day moving averages. Uh, I've talked about the good points. Let's understand the risks involved. There is a risk related to capex slowdown in the country because of some policy changes in the government. Uh, there are very little likelihood, but you cannot say zero likelihood. This company needs to continuously make new investments in buying new cranes, and uh, there may be an inability to secure orders. For example, there is some mishap or a bad reputation because of it. So we need to continuously monitor the order book of the company. Uh, EPC business is new for the company, so we need to understand and monitor how are they able to scale it up. The cranes are not made in India; they need to be imported from US, Germany, China. Uh, so there may be delays, for example, due to this Red Sea crisis today, or there may be some new crisis. China has huge capacity to supply cranes, so there may be a competition who may sense the opportunity and enter the business, uh, uh, because they can quickly import cranes from China. The company currently has most of the cranes from US, Germany, so very advanced and sophisticated cranes. And this risk has actually played out. India had a very good supportive wind policy in the past. Till 2017, you can see they were making around 67-68% kind of operating margins. 2018, government changed the policy for wind projects. Wind projects nosedived. The margins became half at the operating level, and because they have huge capex in cranes due to depreciation, high depreciation, they actually made losses for 4 years. And these were the only 4 years, obviously because of the losses they didn't paid out dividends, but all other years they have paid out around 15% of the profits as dividend. So this risk is still there, and I remember very clearly because I was invested in Suzlon Sanghvi movers in this period. Also, I made losses in this period because of the policy changes, and I've seen around this period when company was significantly undervalued and people thought that this would go out of business. So one of my friends actually invested here and made good money till here when till 2023 when the company recovered, and then he exited. But after this period, I have exited recently around current prices, and I am bullish on this stock. But obviously, I have not made money in all my investments, so I can go wrong here as well. Uh, Thank you, everyone. This has been the details that I wanted to share. I'm happy to answer any questions that you may have.
Yeah, wonderful presentation, Saurabh,
Thank
in-depth
you.
analysis. So I have 2 points to add. One is company has a pricing power. So they are generating good operating profit margins and everything is in a good domain, like 62% in the last few quarters continuously. And on the other hand, FIIs are increasing the stake from last 6 quarters, though very slowly. It's not in the size of 5-10%, but continuously they are going from like 0.5% to have come more than 2% already.
Hmm.
So possibly what you are saying, accumulation, I think it is going on. I also believe that in this company.
Okay. Yeah. Thanks for the input, Puneet.
Yeah,
I have a question.
yeah, go
Yeah.
ahead.
What is the payback period of one coin? Have the company given any details on that?
So, what happens is they raise invoice when they have done. So the accounting policy is once they have completed the project, they raise invoice, and I don't remember the payment period. It's I think around 3-4 months. But what I focus on and I derive comfort from is the fact that they have realized all the payments.
Yeah,
So
cash flows are very good.
yeah, but there have been bad payments, bad debts in the past wind cycle where their clients had gone bankrupt. Uh, but of late, the realization, the payment collection has been reasonable. There are no issues from that side.
So Saurabh, this is Kamal.
Yeah, Kamal. Hi.
Yeah, this is nice presentation and in-depth analysis, right? So I have
Thank
one
you.
question on the basically technical or somewhat on fundamental. I will
Okay.
not go into these basic fundamentals.
Okay.
Regarding competitor, you said about the Suzlon only, right?
No,
Now the
Suzlon was
KP,
not actually. Suzlon
yeah,
was competition in the wind
EPC, right?
EPC business,
Yeah,
not in the rental business.
yeah. In the rental business now, the new company you might have heard is Tarachand Infra, right? They are
Yeah,
coming up very fast. That is a SME company.
yeah.
Right. So, what kind of threat you are looking for? Because many, even AC is also coming into the large cranes, and ACs, JCB is they seeing the opportunity, they can easily foray into these businesses. They have already the cranes business switching, and they have a large clientele as well, right? And wind energy is a large way to go, and I'm
Correct.
expecting them to come. So what kind of competition you are foreseeing about then disrupting this business?
Correct. So as I've highlighted here, competition may enter, and I think it will be foolish for competition not to enter with such a lucrative opportunity. But two things: ACE currently does not manufacture such high capacity cranes.
Mm-hmm.
Two, they are not into rental business. So it will be a huge diversification for them because they manufacture cranes now. Operating these cranes, managing the logistic, या एक project से दूसरे project पे ले जाना, minimum time frame पे ले जाना, तो all this logistics and supply chain they will have to develop. So it is not easy for them to develop, and their core business, manufacturing of cranes and other products, is itself receiving good demand. So there's no incentive for them to move into this. But if they enter, yes, there will be a competition. Tarachand, I have looked at Tarachand. They have clearly said that they are not going to enter into wind. One, they do not have cranes of this size, and two, they have said that they are not going. If you look at their annual report or whatever disclosures they have made, they have never talked about wind. And I remember, as far as I remember, if I'm not mistaken, they have said they are not looking into enter wind.
But I have read somewhere, I don't remember the document because
Just
even
to add, I will add some points here basically. So when we are talking from the ACE perspective or JCB perspective, those kind of cranes basically, those are manufacturing companies, right? Why a manufacturing company will go into rental side? Just imagine HP, who is a laptop manufacturer, would he start giving for a rental or not? I don't think so, right? So that threat is not there at all. Second part is with Tarachand Infra. It is mostly on the infra side, road development and buildings development, those kind of things. So their moat is on that side. And Sanghvi's moat is on the high-end cranes, more than 400 MT and those kind of cranes basically. And
I'm just asking, Ace, and that is okay, but Tarachand, obviously, some company comes and they want to increase their capacity, right? So,
so these each
kind of
crane is,
diversification in the business. When you see the
yes,
tailwinds in some
correct.
business, then they can definitely go into that side.
So I
I
think,
think
LLD,
Tarachand should enter. But
yeah,
yeah,
if they are
they
correct.
will enter.
comfortable, if they have capabilities, they will enter. But yeah, as of now, we can only talk of scenario as of now.
Right.
We cannot
See,
imagine
number of
what.
cranes also matters, right? So 300
Yeah,
cranes, just imagine multiplied by the amount of capex they need. Tarachand Infra. So it will take 2-3 years to reach to that stage, even if they start right away.
yeah. So another is technically, right? So
Yeah.
when we say that, you said that the 50 DMA and even the baseline support is being respected so many times, right? So जैसे हम हिंदी में कहते हैं, अगर हथौड़ा बार बार मारोगे तो दीवार वीक हो जाती है, wall becomes weaker, right? Even in the technical, we say that accumulation 2 times or 3 times force is okay, but it is taking multiple times. So now, like Puneet, we were talking about Kavra. Yes, some bad news comes and then it is immediately broken. It is just standing nearby that. So if the business is so great, I know Sanghvi, when I read it and I like the business. It is just for the audience kind of stuff. Uh, but if some competition comes or some slowdown, maybe a slight slowdown in the orders or payment related issues, then how do you think the technicals will be respected?
So, so if I
So
can add, Kamal, uh, it is a theory. All investing is probabilistic.
Right.
No guarantee that it will go up. It will make wonderful returns. But from the information that is available and that we have analyzed and that we can see, it can make returns. Worst case, bad news will come. It will break convincingly 50 DMA. We can get out, and if it starts making a base again, we can get in again. I am saying fundamentally it looks good and charts are not bad.
Yeah. So I'm
It's just
sorry.
simple that
I'm
the
sorry.
investor has
I'm
to
sorry,
take.
sir. I just wanted it for the audience actually.
Okay,
What
okay.
happens, when we discuss some stocks, audience go, some new
Correct,
learners.
correct. No, that's what I'm saying. I am
Yeah.
saying it is not guaranteed. It can make return.
Yeah.
You have to take your own call.
So I have seen that in my previous, like when we discuss something, people go even in Twitter, they go and buy and what to do now. So it is just for the learners, right? I'm just asking for you. Say your sake. It is a wonderful presentation. It is a right way to present the way Saurav has presented actually audience, right? So it is just for you guys. So don't go and
I appreciate it. You adding, asking the right questions and adding a disclaimer. And my request to audience is please, it is a very simple business, so you don't have to study much, but please spend some time studying this business on your own. Their presentations, their uh, annual report will only you just need to look at their management discussion part and what they have done, and that's it. Build your own conviction.
even you just can listen to the latest con call, last two con calls, and the management commentary. That will help you a lot on presentations as
Correct. Con call is
well.
very interesting. Yeah.
Yeah.
Yeah, Saurabh, we have two, three more questions from the chat.
Okay.
One is regarding what is the average life of a crane? I think it is more than 20-25 years also. So just add
Correct.
to that point.
Correct. I think they have some cranes even for 30 years old.
Yeah.
And what they do is the old cranes also have demand in the market. So they continue, they keep selling those old cranes and buying new cranes.
Yeah. Another question that is,
Yeah,
yeah, Rajiv, go ahead.
Saurabh, very good presentation, first of all.
Thank you.
Yeah. I have two questions. We said it will be giving 20% annual return at 85% or 80% of the capacity utilization.
They
And
make.
they may, okay.
Yeah.
And at the same time, the cost of financing is nearly 9%. And
Correct.
then what about the annual depreciation? That will be somewhere around 15% or 10% at least.
Correct.
So that doesn't make it very attractive. Either return has to be more.
No, I'm saying this 20% is the revenue part. So I'm not saying this 20% goes to the profit. I'm saying their cost of funds is 9%. Using that,
Okay.
they are able to generate revenue of 20%. And then obviously there will be operating expenses and
Okay.
depreciation.
Okay. Secondly, we were discussing profit after tax of cumulative of 10 years is around 207 CR,
Yeah,
and CFO is 1909. So where
yeah.
the rest of money is coming from? This differential of 1700.
It
It may.
includes the depreciation also adds to the CFO
Okay. Thank you.
because they are investing such heavily and there's a lot of depreciation that is getting added to PAT.
Yeah, rest you said that some competitor from China may come.
No,
There
I'm
was a,
saying China manufactures these cranes. So some Indian company can quickly, import these cranes
no,
and
logistics is very difficult in such kind of business.
correct. If you
Otherwise,
I
model is very simple. In fact,
correct,
we are very small businessman. Even we were thinking of hiring two, three, four cranes and rent it out to someone. So
okay,
model is very simple. If you
correct,
have money, you can easily do it. There is no moat in
correct,
the business as such.
correct.
But now the kind of tailwinds are there, so
Yeah,
definitely they profits as it is seen from the balance sheets.
correct.
Uh, Thank you, Saurabh. Thank you. Keep it up.
Yeah, thank you so much.
Hi, Saurabh. Chandal Kumar here.
Hi, Chandra Kumar.
Yeah, very easy to understand. The presentation was very, very nice. Thank you for that. I have one question. As if they want to grow their revenue from here, as
Hmm.
they are already utilized 85%, right? If I'm right.
Correct, correct,
So the further growth can come only from the continuous capex, right?
correct,
So otherwise, the further growth we can't see the growth, right?
correct,
But also, even if they want to do the capex, also I think their debt equity is 0.37. So still they
correct,
can go until 0.7 or even close to 1.
correct.
So they have the bandwidth to borrow and then capex and then grow for example, for another 3, 4 years easily. Is that
Correct.
is that right? Okay.
Yeah. So so there are two things actually, three things. They can grow revenues by doing more capex and getting more cranes.
Hmm.
Two, they can charge more to the client and grow their yields
Hmm. Hmm.
because they have been declining orders to some clients. So now the client comes and says, "You charge me more, but give me grains."
True. True. True.
So they
Hmm.
can make money there. Third
Hmm.
is they have ventured into EPC. So without deploying more capital,
Hmm.
they can grow their revenues and profits significantly.
Through the EPC channel.
Correct,
Mm.
correct.
Okay.
And they every year they keep on adding more cranes, but the problem is because of this experience in the past, where
Mm.
the wind policy changed and all of a sudden you cannot dispose all of those cranes if the market goes bad, and because the
Mm.
market goes bad, then other buyers will also not be interested, and they will still have to continue to pay the interest to the bank.
True.
So that's the reason they are not there. They did around 255 crores of capex this year and not say 500 or 700. So
Hello?
they have a policy how much capex they will do.
Saurabh?
Hello,
Break.
hello.
Yeah, I am able to hear you, Saurabh.
Okay,
Yeah, we missed you briefly, I think. Punit, right?
yeah.
No, no,
So
yeah, I
they are
think what he
saying
says is they are prudent enough to manage their expenses right now based on the past
Okay.
cycles. So they are
Mhm.
not doing it aggressively at this point of time, and they're managing their debt equity ratios accordingly. So
Yeah.
that's what he is.
Also, with the green energy initiative, what the government is pushing, I think there will be a favorable government policy only will be there. Would that be a reasonable assumption?
yes. Till the time this government is there, it will be there.
Yeah, yeah. Okay. Thank you, sir. Thank you.
You're
Okay, I
welcome.
think we'll stop it here. And any more questions you can put in chat to Saurabh, and we'll move to the next presentation. Thanks a lot,
Thank you,
Saurabh,
Puneet,
for
and
your.
everyone.
So just you can stop sharing screen. I think we can hand it over to Ankit. Ankit, you can hear us?
Should I take over?
Yes.
So,
Saurabh, you can stop sharing first. Saurabh, I think you have to stop sharing.
It's already stopped once you took the control. Oh, once, sorry. Yeah.
Okay. Yeah. Now I
Thank
think
you.
should I share now?
yes, yes. Go ahead.
Yeah. Uh, so is the screen visible?
And not yet. I think you have to point to that screen.
Uh, yeah. Is it visible now?
Yeah, it shows something. It shows that it is. Yeah. Now it has come up. Yeah. Yeah. You can start.
Yeah. So the company we are going to talk about today is Muthoot Capital. So before going into the details of the company, I would like to tell you about the background of this company, the promoter's background. So Muthoot, as you might very well know about Muthoot Finance, it is the biggest gold loan company throughout Asia, or maybe throughout the world as well. But this company is related to the other side of Muthoot. There are actually two Muthoots. Muthoot Finance, as you know, it's a red color logo with two elephants on either side. But Muthoot Capital belong to the other side of Muthoot. I will, this group this group is called as Muthoot Blue, and there are five companies in this group: Muthoot FinCorp, Muthoot Capital, Muthoot Microfinance, Muthoot Exim is metals finance, Muthoot FinCorp is into gold finance, and they have a small housing finance division as well, which has just come up. So going back into the history of the Muthoots, they started in 1987, and during the last century, in 1979, the business was split into two promoters, the red Muthoot and the blue Muthoot. So Muthoot Papachan, who is the father of the current promoters, he started the blue Muthoot based out of Thiruvananthapuram. And in around in 2000s and in early 2000s, what they did was they diversified the gold loan business into other fields as well, like asset finance and metals finance, housing finance, all that. Muthoot Capital is basically into two-wheelers financing. Okay, they finance two-wheelers. Hello.
Yeah, go ahead. We are able to hear you.
Yeah. They finance two-wheelers, and during 2014, I think they launched the IPO, and in 2014 they had revenues of 160 crores, and those revenues went to 398 crores in FY20 FY18. So more than 2x revenues in 4 to 5 years. Okay. The current CMP is around 380, 390, I think. So the stock had touched a high of 1200 in August 2018, and we will get now why it has fallen so much. We will get to that part later. The main focus of the Muthoot, this MPG, the Muthoot Papachan group, is lower segment income people who earn 2 to 10 lakh rupees per annum. They finance most of the financing goes to those people only. Gold loans are also a small ticket size, let's say less than 1 lakh mostly. So this is the population that they cater to, the lower income population or the lower to middle income population. Four companies, these are the four companies which are into the Muthoot Blue side. Muthoot Fincorp, as I said, is into gold loans. This is the flagship company of this Muthoot Papachan group. And Muthoot Capital, as the company which we are discussing, is two-wheelers financing, and recently they have started to finance used car as well, as you can see here. Okay, and then there are other two companies which are not of much importance to us right now. And the loans that they distribute, they have a collection facility of on those loans on a daily, weekly, and monthly basis as well. So what that does is the liabilities are usually are very low on a daily collection or weekly collection basis. Muthoot Fincorp also is the title sponsor of the Royal Challengers of Bangalore in the IPL. They started, I think, in 2021 as the sponsors of Royal Challengers of Bangalore, and they are the current sponsors as well. The shirt sponsors. Vidya Balan is the group's main brand ambassador of the whole group, not just Muthoot Fincorp, but of the whole group, all the 4-5 companies on the group. Going to the promoters of this group, Muthoot Papachan, the father of the current promoters, started this group, and his three sons are currently managing this whole group of companies, all the 4-5 companies which we are talking about. They are managing this business from the last 30 years basically. From 1994, they are running this company. The group of companies, and currently they are running as well. And the third generation of this family is also now getting into this business. They are learning this business, and they are managing some positions. The sons and daughters of all the three promoters, they have ventured into this business as well. So I will talk about some investment thesis right now. This is a strong brand, especially in southern India. Most of their presence is in southern India, the 4-5 states of southern India. And this is a very big brand there. The promoters are experienced. They are managing the group of companies from 1994, and this is the owner-operator model. As you might have read in some books, the owner-operator model is something which is very preferred by big investors because they have a reputation to maintain, they have a family name to maintain, and they want to pass on this business to the next generation. So owner-operator business models are usually very good as compared to some third party managing the business. This is a turnaround case. As we have seen, the stock price once touched 1200, and now it is down to 300 odd. So some turnaround is happening. The valuations compared to other peers or other NBFCs are very cheap. The stock is very less leveraged. The debt to equity part on that side, they are very less leveraged compared to the other lenders, compared to other peers. We are in a credit upcycle right now, so the cycle, we are in up cycle, so that should help as well. So despite the company stock falling, the company making losses, CRISIL recently in December 2029 gave them a plus rating, and that rating has been maintained stable, A plus stable, right till the last quarter. These are the group of companies. So what they have is synergies. What they do, say Muthoot Capital, what Muthoot Finance does is they cross sell Muthoot Capital's products as well. The all four companies are into different businesses, but they cross sell each other's products and they do collection for the group of companies as well. We will see later in the slide that two-wheeler sales are expected to rise. From the last decade, we haven't seen much growth in two-wheeler sales, but from the last 1 year, the sales are good. Moving on to the next slide. So what happened, as you can see here, this is the screenshot from I have taken from screener, right from 2012 to, you can see, to March 2023. Consistently, this company has grown profits. Okay, you can see in 2012 they had 16 crores of profits. In 2018 they went on to 54 crores, and then 86 crores in 2019. So what happened in 2022 was, in 2020 COVID hit, and they realized a lot of NPS, for which they did a write-offs in March 2022. For 2 years they carried on. They didn't do any write-offs for 2 years, but in March 2022 they decided to do a complete write-off, and that's why they suffered a loss in March 2022. See, as you can see here, the write-offs. This is the graph of the write-offs they have done in the past. As you can see, there is a huge spike in Q4 2022. Because they decided to write off most of the NPS which they had the loans which they had distributed before COVID. And then this was only the second time the company had reported a loss. The first time was in 1996. So in all these 30 years, this was only the second time that this company had reported a loss. So let's go on to some management notes which they have given. So it was not like it was write off Korea and then nothing. They made a wholesale changes in the company, and the way the way they have managed the company in 2022, and we will touch on some points. So the first thing what they did was they slowed down their pace of growth, and they put an emphasis on control over cost and the credit processes of the company. During that time, they also made a decision to launch their own app. So the customers who weren't able to come to their branches and do the repayments, now they had an option to collect those payments from the app itself. And their focus shifted from to other geographies as well. So before COVID, most of the business was 80 to 85% was in the southern states only. And in 2022, they decided to aggressively approach other non-southern states. Despite all the problems that the company faced, the borrowing cost didn't increase much because, as I said, this is a group of companies, the Muthoot Papachan group. So they had that credibility with their lenders. So their cost of borrowing more or less remained the same, even in the difficult times. These are the financial results from FY22. As you can see here, they made a loss of 171 crores odd. Net NPS around that time was 500 crores. They are significantly down now. As you can see in FY23 and FY24, they are significantly down now. The capital adequacy ratio they maintained has always been good, 19%, and then later on it went to 30%. Right. So now I will share with you some slides which will tell why I'm bullish on this company. So you can see the past. These I've collected this data. The past 4-5 years data before the COVID pandemic hit. How was this company's performance? We should know the past performance of this company. Only then we will be able to better predict the future, how they are gonna do. So right from 2016 onwards, they had like 900 crores of disbursements, and in 2019 they had like 2100 crores. So more than 2x disbursements in 4 years. But the PAT in this same period went from 22 crores to like 86 crores before the COVID pandemic hit. So 2x, there was a 2x growth in disbursement, but the profit went 4x. See, these are all the metrics before the COVID period, 4-5 years before, right from 2016 to 2019. You can see the growth in AUM, almost 3x AUM has grown. Okay, revenue and PAT almost went 3 to 4x again here. Capital adequacy ratio was, anything above 15 or 18 is good, but they maintain a high capital adequacy ratio as well during this period. The book value and the EPS, everything, it was almost like a kind of a linear growth, you know. And debt to equity, if you look, most lenders you won't find below 5 or 6. Most good lenders are in this range only, 4 to 6, 4 to 6. Even Bajaj Finance, I think, has around four times. So they maintain a good debt to equity as well. Lesser, they didn't have too much leverage. These are the return on assets and the return on equity of the company before the COVID period. So it was, return on assets, anything above, if we can get anything above 1.5 or 2 times, I think it's very good. But they had very good return on assets, right, from 2.5 to 3 percentage, and ROEs were also good, more than 15% most of the times, you know. And if you want to go further back, right from 2012 onwards as well, they had a similar kind of growth which they had from 2016 to 2019, right from 2012 to 2016 as well. You can see almost a kind of a linear growth in pads, in disbursements, in the book value, and they were giving very good dividends as well at that time. The
We lost you, Ankit, I think. Other guys are able to hear me?
Yes,
Yes.
yeah.
Okay. Ankit, we are not able to hear you. Maybe he has lost the connection. Let's wait for a minute. Yeah, I just called him. He's connecting back. So by the time he connects, any questions in the chat, if you have, just let me know.
Puneet, one question. So, like this Muthoot Finance, there are many small companies which came up from Kerala. I mean, like Manapuram Finance, and then there are 2 or 3 also. I couldn't recollect the names. But what will be the long-term, the visibility of such companies?
Okay, I will come back to that. I think Ankit is back. I will take the
Yeah,
question.
I'm sorry. I just lost some internet connection.
Okay. So you first will go to that page of Muthoot Capital and then start sharing. Yeah.
So is it visible now?
Yes.
Yeah. So before I lost the connection, yes, I was talking about to you the past data of the company. As you can see, in 2022, they did huge write-offs, and that's why everything was down. The net worth was down, the book value was down. They had a negative earnings per share because they made the losses. But in 2000 FY20 2023, there have been some signs of turnaround. You can see, as you can see, the book value has increased, the net worth increased, and they made good profits in FY23 as well. Here I want to make a cautionary note that in FY22, the management to their con calls itself said that growth is not something that they are targeting in FY24. Their main focus in FY24 has been sustainability and growth. They will focus on growth in FY25 and 26. For 1 year, they would more likely consolidate the position of the company. So FY24 numbers might not look that great, but as we can see, the underlying metrics are improving in FY23. Adequacy ratio has gone up. Return on assets and ROE are almost back to pre-COVID levels. As you can see, in 2019 it was 20.5. The return on equity in 2023 they managed around 17%. So aside from the growth in loan book, every other metrics the company is growing very well. Only the growth, only the loan book is muted because, but this they had mentioned in con call as well that for a couple of years they will slow down the pace of growth. These are some points from the Q3 FY23 con call. And the reason I'm mentioning this is, since this is a turnaround, they are making many changes in the company. Every quarter, they are announcing some new things. So we need to go through that. So in Q3 FY23, what they mentioned was they increased the rate of their fixed deposits, and they are making a separate team for fixed deposits so that they can borrow more money from fixed deposits, which will lower their cost of borrowing. The current cost of borrowing, I think, is 9.8%. So their focus is now to increase more of the borrowing from fixed deposits. And for that, what they have done is they have made a separate fixed deposit team around Q3 in FY23. There was a reduction. You see, as I can see, as I told you, why I'm seeing some signs of turnaround. Their stage 3 book went down as well in FY23. By almost 16%. The NPAs were down as well. They were more than 5% in FY22, and in FY23 they came to below 3%. Adequacy ratio, as I told you in the past as well, and even post-COVID, the adequacy ratio has always been quite high, which is a good sign. And in 2023, what they did was they ventured into corporate loans. They kept the allocation in corporate loans low, but this is the new field for the company. What they have told in my con calls is there are no NPAs in this corporate loans. The yield is low, but there are no NPAs, and they target to keep around 8 to 10% allocation of corporate loans going forward. Business, as we saw in the first couple of slides, the synergies with the group of companies. So what we saw in 23 and in FY24 as well, their business growth from the FinCorp branches. So what Muthoot FinCorp is doing, they are cross-selling the products of Muthoot Capital. They are cross-selling auto loans to their gold loan customers who are interested in buying a new two-wheeler, like that. And they ventured into co-lending business as well. They added two co-lending partners during FY23, and in FY24 I think they have 5 co-lending partners now. So this was again another new stream of business which the company started. And used car financing was again one more thing that which they started in FY23. Used car loans, they gave a ticket size of around 2.5 lakhs to 8 lakhs. And in that con call, they also mentioned one good thing, which was that they are expecting some write backs from the loans which they have written off. They're expecting some repayments from those loans. Whether this is happening or not, I don't know, because this information hasn't been given yet by the company. But if it happens, then the bad will only go. You see, the demand in two-wheelers, they have captured here three screenshots from various sites. This is the above one is from Tijogi Finance. They have given the automobile sales number right from 2022 to September 2022 to September 2023. As you can see, there is a good almost a growth of 30% in two-wheeler sales, which was not visible over the past decade. And there are another couple of screenshots here which tells the wholesale sales in two-wheelers are record high, and they have gone 18% on, in November they grew by 18% from previous year. This is the FY24 financial performance, half yearly financial performance. So we have this until Q2 onwards. And here, more than anything else, as you can see, the AUM is muted. In fact, it is down by 200 odd crores. But my main focus, the main thing I want to talk about here is the underlying metrics of the company, the capital adequacy ratio. So despite the loan book not going much, all these metrics the company is doing well. The GNPA is down, NNPA is down significantly, and the capital adequacy ratio is quite high. Some con notes here from FY24. They had the 1700 odd crores of AUM, and the target to end FY24 was with 2200 crores. So why this AUM went down is they did an asset they sold off some bad loans to an asset reconstruction company. Around 234 crores of loan they sold off to an asset reconstruction company, and this loan was derecognized from their books. Around 78,000 companies they sold to an asset reconstruction company. I think Puneet sir would be able to tell better what is an asset reconstruction company, or we can take that in questions later. They now have 4 co-lending partners. Okay, I mentioned I think 5. Apologies for that. They have now 4 co-lending partners. And one interesting thing that which they mentioned here in the con call was that they are making separate units for each of their departments. Like two-wheelers will now be a separate department. The collection team for this two-wheelers loans would be separate, and the disbursement teams would be separate. And four-wheeler would be a separate business unit as well. And they are venturing into light commercial vehicles as well, which would again be a separate business unit. And there will be another business unit for digital sales. And they have changed the relationship status with Muthoot Fincorp as well. From FY24 onwards, what Muthoot Fincorp was doing earlier was they were only doing disbursement. They were, to their gold loan customers, they were selling these loans from cross-selling the loans. But now what they have done is Muthoot Fincorp has around 4,000 branches across India, and now they will do the collections for Muthoot Capital as well for their customers. So the customers have now the option of paying. They don't necessarily need to go to a Muthoot Capital branch. They can pay at a Muthoot Fincorp branch as well. Used car business is growing. It has become 4 to 5% of the portfolio. And light commercial vehicles have been added to the portfolio, financing of the light commercial vehicles. So in the con call, someone had asked why the AUM growth is slow. So the answer that the company gave is what until the last quarter, what they were doing is they were disbursing only the amount say let's say they were disbursing 200-300 crores, and they were collecting that much as well. So the disbursements have been slow, but from the Q3 onwards, they are targeting more disbursements. Like they have given a target of around 500 to 600 crores of disbursements and a collection of 300 odd crores. So every quarter, I think the AUM should go by 200 to 300 crores from here onwards. And that's why the year-end target they have given is 20 to 100 crores of AUM. They have added a lot of staff as well to the existing staff to target growth. They have currently 160 crores of more NPAs, you can say. The NPAs, which the loans from which are distributed pre-COVID, which they are planning to sell to an asset reconstruction company as well. So this 160 crores might be de-recognized from the book either this year or the next financial year. In terms of their market share, they have a around 7% of market share in the geographies that they are operating. Their overall market share is only 2%, but in the geographies that they are operating, their market share is 7%. This is the analysis of the cost and yield. Their borrowing cost is around 9.8%, and this is the yield which they are generating on that cost on the loans. The reason that the yield is coming down is because they have entered into co-lending and used car business as well, and the yields in those businesses are less, but the NPAs are very low too. In the corporate lending, especially in the co-lending and corporate lending, especially, they are saying that there are almost zero NPAs, and that's why the yield is and that's why the average yield is coming down. The yield the yield in two-wheeler segment is almost 21 to 22%, but since the corporate loans and co-lending loans have a lower yield, the average yield is coming down. So what they have done is recently they have diversified geographically as well. As I mentioned previously, before COVID, they had almost 80 to 85% of the income from southern states only. Right now, that's down to 52%. So they have done well targeting the north area and the East India part as well. Expected credit loss. This is a norm which all NBFCs have to maintain. They have to set aside some provision for the expected credit loss. And the good part is this company has been maintaining more than 25 crores excess of credit loss, what the norms require. So they have more than 25 crores of excess provisions for expected credit loss, more than what the norms require. This is the shareholding pattern. And one thing I want to highlight here is, the promoter holding of 62%, you will rarely find this in any lender, whether it be a bank or any other NBFCs. They have very low promoter holdings usually. So this even during the bad times post COVID, what they didn't do is they didn't sell equity. They maintain a high promoter holding. You can see many other lenders, they only have less than 50% promoter holdings, but this company has a high promoter holding, which is a good sign. So we will do some peer-to-peer comparison here, which I have done here is their main peers are Cholamandalam and Shriram Finance. Sundaram Finance is also into mutual funds, but they do asset financing as well of two-wheelers and four-wheelers. But their main two peers are Cholamandalam and Shriram Finance. If you look at valuation wise, Muthoot Capital is cheapest values. It is almost trading at one. It is trading at book value only, whereas the Shriram Finance, you can see almost 2 times book value it is trading at. And the good part is that their base is very low. So 1700 crores. So they can easily go 5 times, or even more than that, because the base is very low. For a Shriram Finance to go from this base 2 times, 3 times, it would take a long time. But since they have Muthoot Capital have a low base, and they are targeting 200 to 300 crores of incremental AUM every quarter, they can go very quickly from 2000 crore AUMs to, let's say, a 10,000 crore AUM. So we are catching this move early. That's the that's the advantage we have here. Their return ratios are very good. ROEs and ROIs are very good. They are better than their peers, or almost neck and neck with the peers. And this is the biggest leverage that this company has is the debt to equity. Since they have a high promoter holding, they are not over leveraged. It's only 2.68 times compared to Shriram Finance 3.77 times and Cholamandalam is 7.5. This is the standard which you will find with the major companies. Even the major banks and as well, they have an debt to equity of around 7 to 8 times. Bajaj Finance is an outlier. They only have a 4 times of debt to equity. And capital adequacy ratio is very good too. In the past, Muthoot Capital, they were doing really well until 2018 and 19. In the past, they enjoyed a book value of almost 4 to 5.1 times. So if they can execute well from here, the room to go is very large, because not only we will see a growth in AUM, but we can see we will be able to see a growth in valuations as well. So double engine might be at work here. We might get a growth in revenues, as well as as well as the valuations might re-rate. So I've done some conservative and some aggressive stock price estimates as to where this can go. Even if you take a conservative of 15% growth in next to the 4 years, we can almost go from 3 to 4x here. The stock price can increase 3 to 4x even with a conservative 15% growth in book value. That would give around 30 to 35% of Kika returns. One big risk to this growth assumptions could be the equity dilutions. If they have a high promoter holdings, but if they decide to target aggressive growth, what can happen is they might have to dilute some equity, and if that growth doesn't come in, if they are not able to tap the markets better, the stock prices might not rise as much. These are my key antitheses. So one of the key antithesis was the geographic concentration. Before the COVID, what they had was 31 branches. Only one of those branches was outside of South India. It was in Ahmedabad. But now they have but now they are diversifying the AUM into different geographies as well. So that risk is mitigated quite a lot right now. The biggest risk is another COVID-like pandemic. If that arises, that would be since they are catering to the bottom low income groups, the COVID, another black swan event could really derail them, can put them off the tracks, and the NPS could rise very fast. The competition from Shriram Finance and Motors Finance especially is very tough, and now what they have, the big banks now big banks are also entering this space. They are also, especially HDFC Bank, they are going aggressive into asset financing. And what OEMs have is, if you can look at Mahindra Finance, Mahindra Group, they have their own financing arm, and likewise many other OEMs have their own financing arms as well. So business growth here could be tough because OEMs would prefer to finance from their own financing arms. Rural economy, if it doesn't rise, could be another could hamper the growth as well, because two-wheeler demands is mostly from rural economy only. Provision coverage is low since the AUM the PCR is high at 70%, but the provision coverage as part of the total AUM is quite low. So this is one key monitorable for us. Equity dilution, I have mentioned in the previous slide. Cost of borrowing is another one key metric which we have to. What we are seeing nowadays is, people are moving on from FDs to mutual funds. So the big people, like, what they prefer is they prefer to keep their money with the big banks. So for an NBFC, it will be a lot challenging to have lower cost of funds. And if the cost of funds increases from here, the average yields could go down, and the incomes could go lower from here. Some technical analysis. This is the weekly chart of the Muthoot Capital. So as you can see, there is a huge resistance around 450 levels. but the stock is finding good support here at around 330, 340. These are the good support levels. The resistance part is around 450. The support is around 330 to 340, around that part. This is the monthly chart. In monthly as well, you can see it is probably forming a inverse head and shoulder pattern, and it is consolidating in that 100 points range from around 350 to 340, and there's a resistance here in this part. So only this much. I would like to extremely thank Puneet sir for presenting this opportunity, and I apologize. This is my first presentation. So if I was not able to present it properly, or if I missed something, I apologize for it. And extreme thanks to Puneet sir for giving this opportunity and giving me the confidence to present this before all of you. If so, and if there are any questions, Puneet sir, if you would like to add anything.
Yeah, thanks a lot for your detailed analysis. I think you have tried to cover maximum aspect of this business and led us to understand, okay, what this group is doing specifically. So thanks a lot for this. So regarding the asset reconstruction, right? Those kind of firms generally take the bad loans from from the banks or the other institutes, and then they try to recover from their side. So it's a different business altogether, asset reconstruction companies. So maybe sometime we need to deep dive into those kind of companies separately, maybe in a separate session itself, what they do and how they do. Apart from that, I think it's a nice growing business. It could be a steady compounder, looks like. And yeah, I think the demographic advantage they have in India. So hopefully they will do well. That's my understanding. Floor is open for questions and answers if somebody has it. So one question that we have in the chat is any comparison with the Shriram Capital? And second question would be gold lending has been their forte, but moving into auto loans will put them head to head with players like Bajaj Finance. So you might be comparing with Muthoot Finance versus Muthoot Capital maybe separately in the chat.
Muthoot Capital is a totally different company.
Yeah, correct. So,
and one thing I would like to mention here is this group, this blue part of Muthoot, they have 4 companies, and in the concalls they have clearly mentioned that all those 4 companies, they don't compete against each other. They cross-sell their products, but they don't compete against each other. And automobile division is the complete forte of Muthoot Capital only.
yeah.
Muthoot Corp would never enter into automobiles loans, or any other group of companies would never enter into automobile loans.
So how is the comparison with Shriram Capital or Shriram Finance or Bajaj Finance?
Shriram and Chola are the main peers of this company.
Okay. So, yeah. Any other questions, guys, for Ankit?
So Ankit, with the rising EV sales now and in the future, the demand for two-wheelers loans would increase, right? So it is it's a favorable for Muthoot Capital.
Yeah.
Yeah.
What happens is two-wheelers also cater to replacement demand. What happens is automobile sales go through cycles. So we are probably in a cycle now where a lot of replacement demand is coming in. The two-wheelers which were sold a decade back, people a decade or 2 decades back, the people are now want to replace them.
Correct.
Okay. So a lot of two-wheelers work on replacement demand as well, and we can see the recovery in terms of the numbers which I have shared in one of the slides, as you can see. If yeah, this is that slide.
Yeah, correct.
Yeah, we have the numbers here from Tijori Finance. Almost a 20 to 30% growth from FY22.
Okay, thank you, Ankit.
Ankit, one question. So, how is there funding happening here, like the borrowing part? So now recently
they're borrowing from from some of the SBI is lending to them as well, and there are some other banks like IDFC and CSB Bank who are lending to them as well. and borrowing from banks is around 55 to 60%. The rest of it is coming from NCDs, their fixed deposits, and other ventures. And but they are looking, they are targeting more of the borrowings from the fixed deposit parts. What they have done is they have increased the rate of FDs. Right now they are providing 8.5% interest on their FDs, which is a very good interest rate. And their target is to have most of the borrowing from FDs part as well, and from the rest of it from the banks.
Okay. Yeah, I think this recent fall in HDFC Bank is because of the lower no deposits, and they had a lower interest margin. No? So this
Yeah.
would also affect NBFCs, right? Like
Yeah, I think the cost of borrowing is one thing which is, which can be very tough for all the NBFCs, not just Muthoot Capital, but for all the NBFCs, because money is shifting to mutual funds and other assets. And so people are keeping very little money in bank deposits right now. And whoever is keeping in bank deposit, they are preferring the big banks. If I want to keep my FD, I would, even if HDFC is offering a lower interest rate, I would prefer to keep it with HDFC rather than with some NBFC. So that is going to be a big challenge. The cost of borrowing is going to be a big challenge. To maintain a low cost of borrowing is going to be a big challenge, but that is a universal for every NBFC. I think not just Muthoot Capital, it is universally applied to all NBFCs.
okay, thank you.
Anything else?
And no other question on the chat. I think, yeah, we can pass it to the next participant. And if any more questions come, you can take in the chat.
Yeah, I can take in the chat, and if anybody wants to contact me separately, they can do as well.
Yeah, thanks a lot for your presentation. Yeah, Suraj, you're there.
Should I stop with the screen?
Yeah, you can stop sharing.
Can I share it now?
Yes, go ahead. Yeah, visible to us.
Visible, right?
Yeah.
पुनीत भाई मेरा आवाज क्लियर है आ रहा है?
बिल्कुल.
Okay, great.
Just put in the presentation mode and we'll start.
Is it in presentation mode right now?
Yes.
Okay. So, good morning, guys. This is my second presentation. In last our event, we have presented Mason Wall India Limited, which was around 300 level, and current market price is around 650 or 670. So this is my second presentation. Thanks for the opportunity, Puneet. Today we are presenting Jalaram technology. It is one of the retail segment category stock. Here we have invested from 290 level. Current market price is 397, and market cap is 441. So standard disclaimer from my side. We have already invested in this stock, so there is no any recommendation or any advice for buying or selling of this security. One must have to take this for educational purpose only. So process we have followed while selecting this company. It is a bottom-up investing approach. We did some scuttlebutt on this company. Some promoter quality, his vision, how he is hungry about his scalability of the business, and we found this is as under such company which is at very nascent stage of growth. It is very young business, and we found it is affordable to buy considering long term view. And basically it is kind of business which focus on unorganized market to organized market. So we'll start with it. Core Mobile actually people say it as a next Aditya Vision. So what we have found the information about promoter. it is the 7-star promoter, Mr. Pintu Bhatt, who is madly hungry for the growth. So I feel this can be the next level of Aditya Vision. ये कंपनी का बिजनेस बिल्कुल सिंपल है. I mean, this is kind of mobile retail chain. They sell actually mobile, then value added services product like TV, fridge, air conditioning, coolers of different brand like TCL, Haier, Daikin, Hultas, MI, Realam, OnePlus, Xiaomi, Skytron, Apple, Samsung, Honor Mobile, etc. They have some other store also where they sell EV bike of Revolt basically. If we our main actually criteria for investing in this SME company is promoter basically. So promoter is the driving force of the company as per our thesis. So we will go through promoter. Promoter has started this company in 2012. Before that, he was in Dubai with zeal of starting something in India. He came back to Gujarat and gone through a lot of hurdles and tough time. He started his first shop at Prime Communication area in Ahmedabad. When they started this in 2012, no one thought that they will make the brand like Core Mobile, as they are already well established player in the market, like Chroma, Glam Digital, Vijay Sales India, that was established in 1971. Purvika Home Appliances. Purvika is a Chennai-based company basically. These were the brand. I mean, retail chain brand at that time, and he took the fate to compete with this brand. He has gone through in details of the business model of each and every of this major player, spent a lot of time on ground, paid a hefty amount to some survey agency to pull out the details of the business, how they work exactly, and form his own strategy to penetrate this market. As of now, Core Mobile have 190 store in India and majority of store in Gujarat. Now they have expanded in UP, Rajasthan, and in Maharashtra. They started in Maharashtra also. Few store they have started in Delhi also. So actually, I will give you 2-3 instances about the promoter when I came across this promoter. So this 2-3 instances will help to understand how is the quality of the promoter and his hunger. In 2019, when Core Mobile was having 25 store, he and his one of the friend, I mean partner, was sitting in the office, and this promoter was discussed that I want to add 25 more store. So his partner challenged him कि कितना दिन में complete कर लेगा ये. He wrote the date to complete it in next 10 to 11 months and told his friend that मैं जब तक ये complete करूंगा ना, I will not meet to my family. So he moved on and completed that next 25 store within a 7 month itself, and then he traveled to meet his family on next day itself. So from this, I feel there is a zeal, passion, commitment, hunger, and execution skill. One kind of guts in the promoter. In second instance, in 2018, some mobile manufacturer like Oppo, Vivo, they give lucrative against target completion to major dealer and distributor. So mobile business head had some meeting with 13 major distributor in India. उसमें Core Mobile में थे. So what they told कि आप sales target complete करो, आपको company जो चाहे वो perk incentive, first class facility जो भी है आपको provide करेंगी. So a lot of people ask, major distributor ask about business class flight ticket. One of the distributor asked 25 first class ticket of the IPL match. But ये जो promoter है basically, he asked to that manufacturer कि मुझे कुछ नहीं चाहिए, मेरा बस logo ground में दिखना चाहिए किधर. I mean, he asked him in friendly way maybe, but that show कि एक छोटा होने के बाद भी how उसका dream कितना big था. So ये 2018 का बात है. In 2023 इंडिया वर्सेस आयरलैंड का इंटरनेशनल मैच हुआ था, एक टूर्नामेंट हुआ था. So promoter succeed to place his logo on Ireland player jersey on front screen in the ground. This is the some snapshot. So from this instant, I found the power of dream and hunger to achieve it in the promoter basically, which requires in scalability of this business. In third instance, when they try to enter in UP market, there are a lot of hurdles they face, including strike from other distributors. They put pressure on the mobile companies, and in spite of that, through the good relationship and their proven track record of addition of stores in minimal time, they try to successfully convinced mobile manufacturer to go with Core Mobile at initial stage itself in that region. So they started their executions in UP also, in spite of having such hurdles. This show their connection, relationship, and this confidence in his ability of execution. So this is about the promoter, which is the number one part of our thesis. We come to a company product portfolio. Company offering around in three major category: smart communication device like phone, tablet, mobile accessory like charger, mobile cover, screen guard, memory card, speakers, power bank, etc. Second, consumer durable like TV, fridge, laptop, cooler, AC, washing machine, etc. Electric bike like exclusive they are having exclusive dealership of Revolt motorbikes for Ahmedabad region, where they offer electrical bike, namely RB14 and RB13 under the brand of Revolt. So they have some store of Revolt also, where they sell mobile as well as this electric bike. In future, they may increase their product range. They are operating almost 90 plus retail store of the company under the brand name of Core, Erox, Simron, and General Electronics Revolt in different part of India. Company operate with model actually franchisee owned and franchisee operated branch retail store, that is FOPO model, and franchisee owned and company operated branch, that is FOCO model. Company get franchisee deposit from franchisee. This money they utilize in company's outlet with less capital requirement. It will help them in scalability of the business. Company has acquired almost 60% stake in Hiermo, which is having 1.5 crore CR at this stage. आप अगर Amazon वगैरह पे देखोगे तो Hiermo ब्रांड के Hiermo ब्रांड के हेडफोन, घड़ी वगैरह सब वो लोग वहां पे बेचते हैं. Company purchased Magic Locker software from Absolute Soft System to install in each mobile which is being sold, and they also resell their software also. Company tie-up with company recently, I think 4 months back, they tie-up with Apple. There are only 35 company having such a tie-up with the Apple. Company has tie-up with Honor India for selling their product. Honor is the biggest brand in China and Middle East market. This tied with help them to cater the consumer preferring mobiles with all premium features. they are having almost 20% own store on FOCO model, franchisee owned company operated 13.6%, and FOCO model almost 60%, and electric bike currently 6.5%. This is the bifurcation, and top 10 supplier contribute around 54%, 51%, 77% to their supplier means mobile manufacturer or this electronics manufacturer. So we will see market size and trend basically. So Indian smartphone market size grow by CAGR 10.5%. Indian consumer indicated strong demand of smartphone purchase over next year. So this graph will show you the how cell phone demand is increasing day by day. some major factor contributing to the growth of the market are the growing disposable income of Indians, development of telecom infrastructure, the emergence of budget-centric smartphone, and increasing number of product launches. Indian, if we see Indian consumer market, these are growing by 6.8% CAGR from 2023 to 2030. Xiaomi plan to push offline sales. This is their statement. Our market position offline is substantially lower than it is online. Offline is where you have other competitors who have been executing fairly well and have larger market share. So Xiaomi want to open their offline store. India should see fivefold increase in high income household by 2031. So this will help in selling of this electronic gadget basically. So now there is one actually question, why offline market, why people prefer offline market. So these are some snapshots I have taken from different newspaper of electronics. I mean e-newspaper. So why Indians are buying the phone offline? One of the reason why offline sales may lead is because brands are increasing wrapping up their offline footprint in the country. As per that analyst, it would take share from online share this year. Festive season, the share of online smartphone sales will come down compared to offline sales. We are seeing rising trend of offline market as online heavy brand like Xiaomi, Realme, OnePlus are focusing expanding their offline retail chain. Reduce offline restriction coupled with similar discount compared to online led to spike in demand of offline sales channel. According to Faisal Fouza, founder of and chief analyst of TechCare, he's saying that compared to brand like Samsung, OnePlus, which have strong fundamental across the offline as well as online, brand like Xiaomi, Realme have been heavily dependent on online channel. So this brand intentionally kept their offline channel weaker as online has hot selling channel. But now things are changing. Brand have now realized that they need to be well around in online as well as offline. While buying phone offline from the physical store have several advantages. It gives you hands-on experience, immediate gratification, expert assistance from the store, warranty and support from store. It builds the trust, and you will have some negotiation power with them compared to online price. Sales of the phone offline are being driven by premium product, though with customer preferring Amazon and other online channel for buying the cheaper product. जो भी what I feel from this All India Mobile Retail Association that जो भी महंगे स्मार्टफोन है बेसिकली तो लोग प्रेफर करते हैं कि आप ऑफलाइन ही परचेस करो ताकि उसमें अगर कुछ इश्यू होता है नहीं तो हैंड्स ऑन एक्सपीरियंस लेके कॉन्फिडेंस बिल्ड होता है, परचेस करना इजी होता है, डिसीजन मेकिंग इजी होता है. Demand of phone price about 20,000 has grown across the Indian city between H119 to H122 as well. So these are the growing market I can see. Core Mobile is using a lot of different channels of marketing, influencer marketing, hoarding visibility to get some influencer on board for road shows and all. These are some glimpses. We can see company growth aspect here. Company having good relationship with the manufacturer. It is thin margin business, however, real game lies in the volume. Currently, 1 to 1.5% PAT seems low, but it may increase further as with increase in the store. Company may start their own brand of mobile accessories. This will be very high margin business. जो mobile accessories it will be very high margin business, and it will reflect in their PAT. Company is targeting almost 1,500 store in next 3 years. With the track record of the speed of execution of this promoter, I think he can easily achieve it in 3 to 4 years, next 3 to 4 years. One touch point increase, they will entitle for good profit margin from the brands. जब टच पॉइंट बढ़ते हैं, मतलब 1500 स्टोर जब भी स्टोर बढ़ते हैं, तो जो मेन डिस्ट्रीब्यूटर रहता है लाइक कोर मोबाइल, they will get special kind of discount from this manufacturer, because brand don't have to go here and there to search around for their sales. With this 1,500 touch point and accessories brand expecting their increase of their margin up to 4%. PAT margin, here I'm talking about PAT margin. Once they increase the toll, they will have a bargaining power from the manufacturer. Hence, it will buy at less, which will reflect in their PAT. We can check operating profit of the Aditya Vision. जब वो starting में कैसा था और अभी कैसा है, we will go through it. I visited to different few stores of the Core Mobile. There are so many happy customers who like the store. They get first and feel of product with all the details and rich experience from the salesperson. Same reason due to which Aditya Vision became big in UP and BR. Customer service is such a that if any problem is felt in the mobile core, people help them free of cost at store, which is the plus sign of the customer satisfaction. These are the same reason where Aditya Vision has grown. So company growth aspect में when core brand will famous, every small retail outlet store may take their franchisee, as they alone can't compete with the professional company. Normal shop will get 70 to 80% more margin than usual when they join the core. अभी जो उनको मार्जिन मिलता है उससे 70-80% उनको ज्यादा मार्जिन मिलेगा. So local shop will also join this core brand. Core is focused basically on tier 2, tier 3 cities, where Aditya Vision focused, and is getting good traction in the market. So here I don't see any bigger pricing power or anything, but promoter vision, उसकी जो बड़ी सोच है, history of execution capability, I think this is one kind of mode. इतना scalability और execute करना is not a joke basically, and the way they are having good relationship with this mobile manufacturer, electronic manufacturer, tuning with their sales team. This is one kind of mode I can see. Now check operating profit of the Aditya Vision then and now. जो OPM था Aditya Vision का, that was 2%, 2%, 1%, 2%. When they have scale up their stores, basically their OPM have significantly increases 3%, 7%, 9%, 10%, 10%. So this show the how low base effect work. जब आपके स्टोर बढ़ेंगे, वॉल्यूम बढ़ेगा, इन दैट केस आपको मार्जिन अच्छा मिलेगा कंपनी से. So your OPM can increase, and same can happen with the Jalaram. This is I feel fundamental aspect of the company. Current market cap is 469, current price is 421, stock P is 191, ROC is 17.3, ROE is 14.6, sales growth is 68.5, profit growth is 115%, debt to equity is 0.96, that is below 1. In March 23, they are having sales of 249. In March 24, they will touch to 460 with 1.2 and 1.25 margin. So what I feel from 2 to 3 year downline from here, when they increase their store, their sales will go to 3,600 with 4% PAT. PAT will come around 144%. How this will work, we will see in next slide. Basically, and these are some graphs pull out from this chart. Companies at nascent stage of growth, numbers may look very absurd here. However, due to the low base effect with increasing number of store, will show the good result. This obviously comes with high risk and high reward. So companies at very nascent stage, numbers जो भी थोड़े absurd दिखते होंगे अभी, but once it will grow, numbers will show their real. I mean, we can see the good results further. So how we will achieve this figure? We will see here. So if store size goes to 1,500 up to FY26 or 27, we can say, let's take monthly sales of 20 lakh average per store. Usually 10,000 10,000 rupees के 10 मोबाइल दिन में बेचते हैं. I check with lot of mobile seller basically. Check with Pure Store on the ground. Let's say 20 mobiles sold per day with the price of 10K. So it is average around 2 lakh per day. So annual sales of per store is 2.4 CR. Here we say average figure of 20,000 per mobile basically. I mean जो भी एप्पल वगैरह ये जो प्रीमियम ब्रांड के फोन है तो थोड़े महंगे आते हैं बेसिकली. तो 1500 स्टोर into 2.4 CR, so 3,600 CR sales annually. No, we have not yet considered the sales of mobile accessories here, other consumer electronics item. If we consider it, it may cross 5,000 CR sales per year. Let's consider 4,000 sales with 4% PAT. So the PAT will be around 160 CR, and market cap will be 5,600 CR. If they achieve it, the market can become 5,600 CR. Here we have considered around 35 P. We have considered. If we consider around 25 P, it will touch to 4,000 CR market cap. In short, when business scale, margin improve, sales will increase, then such a business show hockey stick growth like suddenly like Aditya Vision. Scaling will happen which is under progress. Margin will improve. Then such a business show hockey stick growth. Low base effect will work out here. Low base effect is in the business and economic is tendency of small and absolute change from low initial amount to be translated into large percentage change. This is the chart I have drawn down. I don't see any visible spike from currently, but if this wedge can break out, it can go up from here. Some associated risk I have written down. Company may find difficulty while opening such a huge number of store. This will hamper the projection and growth of the company. Opening of the store and running the store successfully are two different things. If they're not able to run the store well as per the expectation, it may affect the sales and profit. Franchisee operated store are more. Its success depend on hunger of store owner and its skill. Any fire incident at inventory location may hamper on business. Company will face competition from established players like Reliance and Chroma, etc. In addition to it, local mobile association, lobby, community may increase hurdle while entering in their region. This will harmful for expansion of the expansion strategy of the company. These are some associated risks. Finally, here it's completely based on promoter, possible scalability of the business, and working of low base effect after scalability of the business. Company that very nascent stage of growth, there might be pessimism around this company, but I feel which will help them to grow around. Thank you so much for your time for listening my story. Story of the promoter and some presentation around it. Thank you so much. Hello.
Yeah, thanks, Suraj bhai. So So it's a good deep dive.
पुनीत भाई सब एक्चुअली आवाज नहीं आ रहा था, मुझे लगा मैं खुद ऑफलाइन हो चुका हूँ ऐसा.
नहीं. It was, I think everybody was engrossed into your presentation.
Okay, so floor is open for any questions.
Yeah.
Outstanding, Suraj bhai. It is you have collected so much of information, so it was it was very interesting when we see it. Thank you. Only one question I have. The from the valuations front, it is at around 191 PE. I fully understand it is at a nascent stage. So to sustain this PE, they have to keep growing in the same fashion, right?
100%, yes.
So their earnings also will grow. So similarly, their stock price also will go, and then the PE will sustain. Basically, for example, if their growth is sustaining with the same PE, we can see a increase in the share price also. But if this accessory business didn't scale up, instead of 1.25% PAT, if they don't go to 4%, that will be a big challenge, right?
Exactly right.
Yeah.
Actually thing is that जब आपके पास नंबर ऑफ टच पॉइंट बढ़ते हैं, डिस्ट्रीब्यूटर को ना एक स्पेशल डिस्काउंट मिलता है मैन्युफैक्चरर से. So that will also add to their PAT basically. This is number one. And secondly, जे मोबाइल एक्सेसरीज उसमें अराउंड 40% 50% मार्जिन हो जाता है ऑलमोस्ट. So they have some plans of plan to come with their own accessories brand. So hopefully it will add in their PAT margin. But PAT margin expansion is very, very important here.
When are they planning to do that?
Don't know.
Okay.
Yes.
Okay. Thank you.
Yeah.
सर क्या पता क्या, अगर लेट से कोई बंदा 20,000 का या 50,000 का मोबाइल लेता है, तो उसके ऊपर वो 1,000 रुपए का जो आराम से कवर लेता है, मतलब स्क्रीन गार्ड और एक्सेसरीज लेता है, तो उसमें मार्जिन बहुत हाई है. अगर वो 1,500 अगर उसके टच पॉइंट्स हो गए या उसके स्टोर हो गए, तो ये काफी सिग्निफिकेंटली कंट्रीब्यूट करेगा इन टर्म्स ऑफ पैट. दिस इज नंबर वन. नंबर टू, उनका जो हियरमो ब्रांड है, जो एयरफोन का ब्रांड है, सो दे आर द एक्सक्लूसिव डीलर फॉर इंडियन मार्केट, तो उसमें मार्जिन काफी हाई है. और नंबर थ्री, वो जो मोटर का सेगमेंट वगैरह जो बोल रहे इलेक्ट्रिक मोटर का, वो अभी यहाँ पे काउंट ही नहीं किया इस कैलकुलेशंस में. तो जहां पे भी टच पॉइंट बढ़ेंगे तो उधर वो 1 या 2 गाड़ी खड़ी कर देंगे, जस्ट टू शोकेस देयर कैपेबिलिटी. और उसमें भी अगर वो सेल बढ़ता है तो दैट इज गुड फॉर द कंपनी. तो ये 2-3 चीज है, आई थिंक इट विल कंट्रीब्यूट. हेलो.
Yeah. I think you made the right points. So yeah, guys, any questions for Suraj?
So that's a nice presentation. This is Muthoot. मुझे बस ये पूछना था कि have you met this promoter also by any chance?
Yes.
Okay. Nice.
Suraj, hi, great presentation here. I loved it. Few questions. What are the risks that you see in scaling up? And two, why do you,
this is the risk, sir.
Sorry?
These are the risk.
ठीक है. Second, any idea how did you arrive at that 4% kind of margin PAT? And do you have any idea about if they're able to offer same pricing as Chroma and other retail chains for us same brands?
Sir, actually number one is that अभी जो 1 to 1.5% PAT है, तो ये 4% कैसे होगा ये मैं बताता हूँ. जब आपके नंबर ऑफ स्टोर बढ़ते हैं ना, आपका वॉल्यूम बढ़ता है, तो जो वॉल्यूम बढ़ता है ना, तब जो मोबाइल मैन्युफैक्चरर जो इलेक्ट्रॉनिक्स मैन्युफैक्चरर है, वो डिस्ट्रीब्यूटर को एक्स्ट्रा मार्जिन प्रोवाइड करते हैं.
करेक्ट.
Okay, so it will add in their PAT basically. Number one. Second जो मोबाइल एक्सेसरीज बिजनेस है, जो मोबाइल एक्सेसरीज बिजनेस का मार्जिन ऑलमोस्ट 40-50% रहता है. If you check with your local store and all. जनरली 10-20 रुपए का जो मोबाइल कवर रहता है वो 100-200 300-400 रुपीज में बेच जाते हैं कभी कभी बहुत
हाँ
बहुत टाइम. So that will be the huge business. It will also add in their PAT margin.
okay.
So in that way, they can achieve their they can expand their PAT up to 4%. अगर आदित्य विजन का भी देखा ना आपने सेम दिस आई एम टॉकिंग अबाउट मोबाइल ओनली. यहाँ पे मैंने इलेक्ट्रॉनिक सेल्स का कंसिडर किया ही नहीं. तो वो भी एक एडिशनल फैक्टर आने वाला है.
Okay.
सो सेम आदित्य विजन का जैसे एक्सपांड हुआ था, so this will expand, I feel.
Okay.
Yes.
I think so.
correct.
Saurav's question is more towards why 4, why cannot 5 or 6 maybe, or why cannot 3? Like, I think to be very specific.
I put it very conservative, Puneet
Correct.
bhai, 4%.
It can grow more also actually.
It can grow 5 to 6% actually, but
Yes.
I put it 4%.
Yeah, it was difficult for me to believe 4%, but I just now checked Aditya Vision,
Mhm.
and they have gone to what is that? 5%, I think.
It is volume game actually.
Correct. But any second question, is the pricing similar to Chroma and Reliance Retail?
यस यस यस. अगर देखोगे ना, अभी आपको कुछ लेना भी है, सपोज आपने अगर स्टोर वालों को दिखा दिया ना कि भाई ऑनलाइन प्राइस ये है, आप मैच कर सकते हो क्या, दे कैन इजीली मैच इट.
हाँ, अच्छा, तो को आई नो क्रोमा तो कर देता है, बट ये कोर भी कर देता है क्या मैच?
करता है यस यस यस. इवन
ओके.
सर आप किसी लोकल शॉप में चले जाओ, वो भी मैच
हाँ,
करने का ट्राई करता है. तो दिस कोर तो इजीली करता है.
ओके. नो, माय स्पेसिफिक क्वेश्चन इज, आपने मतलब जाके स्कटल बट किया है क्या?
Yes, yes, yes. I visited the 5-6 store of this Core Mobile.
Okay, and they were able to match the pricing.
Exactly right.
Okay, excellent. I love the details about the promoter यार. मतलब keep updating अगर आपको कुछ और पता चले तो.
Sure, भाई. Thanks.
Thank
अच्छा,
you.
और एक चीज आई जस्ट वांटेड टू ऐड, क्योंकि मैं भी उसको मिला हूँ. अगर उन्होंने किसी को फ्रेंचाइजी दी, राइट, तो उसका पर्पस कभी भी फ्रेंचाइजी से पैसे कमाना नहीं है ये भाई साहब का. तो लेट्स से कुछ अनअवॉइडेबल इंसिडेंट्स है. अगर स्टोर ओनर ने, जिसने भी फ्रेंचाइजी ली, अगर उसने प्लान किया कि नहीं यार दिस इज नॉट वर्किंग वेल, तो वो इमीडिएटली अगर कोर मोबाइल को अगर ईमेल वगैरह करता है, तो ऑल ऑफ सडन वो क्लोज नहीं करते. तो ये खुद प्रमोटर भाई साहब उसके घर, उसके सिटी में जाते हैं, उसके साथ खाना खाते हैं, देन ही विल अंडरस्टैंड व्हाट इज दिस प्रॉब्लम. अगर वो सीरियसली प्रॉब्लम, अगर कुछ सॉल्यूशन अगर निकलने वाला नहीं है, देन ही टेक अ डिसीजन कि भाई इसको क्लोज कर दे. अदरवाइज ही हेल्प दैट स्टोर ओनर और दैट फ्रेंचाइजी ओनर टू हेल्प हिम बेस्ट पॉसिबल वे फ्रॉम हिज साइड. तो ये मतलब देखो, जिसको बड़ा करने का रहता है ना, वो ऐसे अप्रोच रखता है.
I mean, it is very genuine approach. Even they if suppose they take 3 lakh or 4 lakh from franchise owner, and they give them 3 year basically, 3 साल के अंदर में बंद नहीं करना चाहिए ये. अब 3 साल के बाद अगर 3 साल के अंदर अगर बंद करते तो आपको पैसा मिलता नहीं बेसिकली. 3 साल के बाद अगर आप बंद करना चाहते हो कि यार सस्टेन नहीं हो रहा है, तो दे कैन रिटर्न बैक योर फ्रेंचाइजी अमाउंट.
सूरज, मैंने देखा है बाकी बाकी जितने भी रिटेल चेन थे ना, दे रिपोर्ट कि कितने न्यू स्टोर ओपन हुए हैं, कितने क्लोज किए हैं पुराने, कितना सेम स्टोर सेल्स ग्रोथ हुआ है. वो ऐसा
एग्जैक्टली.
numbers हैं क्या इसके?
सॉरी.
अ, जो बाकी रिटेल चेन्स होते हैं ना, दे रिपोर्ट नंबर्स की इस क्वार्टर में कितने न्यू स्टोर ओपन हुए हैं, कितने ओल्ड स्टोर क्लोज किए हैं, सेम स्टोर से पर स्क्वायर फीट ग्रोथ कितना हुआ है. वो
सर
इसके कुछ नंबर्स हैं क्या?
ये फिगर तो मेरे पास नहीं है. गुड इनसाइट. मैं ये फिगर जल्दी सामने लाने का ट्राई करूंगा.
ठीक है, प्लीज शेयर करना ग्रुप पे.
यस यस यस.
ओके, थैंक यू.
planning to मतलब open outside Gujarat?
Yes, they are already in UP, Maharashtra, Delhi, even in Rajasthan.
Okay, thank you.
So is the plan to expand only in the tier 1, 2, or like what is the strategy?
Sorry.
No, what is the strategy to expand stores? Is it only in tier 1 cities or tier 2 also?
No, tier 1, tier 2, tier 3 also.
Yeah.
Yes.
Okay. So per store, right? I think here increasing number of stores is the key here, and the promoter. Now with
Promoter, increase number of store, and first of all speed of execution. कितना जल्दी वो execute कर पाते हैं ये चीज.
correct. And with the commercial real estate prices are also going up, right? I think will this affect their margins in terms of profit store wise, right? Because we
सर
are expanding store.
ये तो सब रेंट पे रहता है ना सर. रेंट तो इतना बढ़ता नहीं है.
तो नहीं है सूरज, रेंट बहुत बढ़ता है,
तो कितना आई मीन डबल तो नहीं होता ना हर साल 8 to 10%.
commercial rents have increased by 30% in one year.
1 year.
हाँ, 1 year.
I am hearing this first time यार.
आप चेक करो commercial.
Okay.
My wife works in this retail expansion for another for a hospital chain, and I get to interact every day with her on these, and the rates have increased significantly.
Okay.
और आप मैजिक ब्रिक्स पे जाके देखो, सारा डेटा है. कोई भी आप लोकेलिटी सेलेक्ट करोगे, आपको ट्रेंड मिलेगा कि कैसे रेट इंक्रीज हो रहे हैं ओवर अ पीरियड.
ठीक है.
तो लास्ट 1 ईयर में रेट्स हैव गॉन कमर्शियल में बाय 20-25%, रेजिडेंशियल में 50% एक साल में.
Okay.
You can check. So
Let's
that is a risk.
Yes. I will check it.
Okay.
Yeah.
Okay. I think we shall move to the next one.
Thanks Puneet for your opportunity.
No, it's see, you guys are only helping me out to do this, right? So I should thank all of you. Yeah. So yeah, we'll move to the next one, Devanshu.
I will stop it, right?
Yeah.
Thank you.
Yeah.
Yes, sir.
Yeah. So you can start sharing.
So is it visible?
Yes.
Yes, sir. So good afternoon, everyone. This is Devanshu, and I am presenting a stock which is Coastal Corporation. So let's move on to the topic. So shrimp is the most loved seafood in the US, while Americans eat 590 million kilogram of it every year. So I'm a vegetarian myself, so I don't know which is the tastiest one, but you can try the butterfly one. So once it was a luxury product only for occasions, but when Asian farmers started growing it, it became a cheaper product also. So let's move on to introduction. So Coastal Corporation is engaged in mostly processing and export of seafood, mainly shrimps. So it is one of the leading producers and exporters of high quality seafood across the globe. So it also exports to USA, Europe, Canada, UAE, and many other industries worldwide. It also exports raw and uncooked frozen shrimps in IQA forms and ready-to-eat products also. It is one of the top 10 players in shrimp processing and distribution industry worldwide. So moving on to financials, over here we can see that market cap is 443 crores. I have not mentioned the stock P because it's in minus exactly, because the net profit is not right and the results are down. So book value for Coastal Corp is 195, and we can also see that the price to book value is 1.70. Return on equity is very low, 2.93%. Industry P is also fairly good, 38.4. So cash flows are also in minus 117 because of the increase in the feed prices of the shrimps. And the farmers are also struggling to produce the shrimp, which incurred them the higher cost. So moving on to the profit and loss scenario, the operating profit margins are going down
comparatively from 2020 to 21. So we all know that in 2020 that Corona was there. So shrimp is also a non-veg product. So it is related to very disease-related thing. So the operating profit and the net profit was going down for the company in 2021, 22, and 23. Also, the supply and the global shrimp prices have been tampering down due to weak demand and supply soon. Also, the Ecuador shrimp prices supply continues to add some pressure on it. From a competitive position, India is still ahead because we produce many value-added products and ready-to-eat products which have higher margins comparatively to Ecuador. So moving on to the result is that we can see the net profit is gradually decreasing from FY20 to 21, 22, 23. So it is mainly because of the higher shrimp feed prices, which has increased and which led to the farmers for very less profits, and also in the increase in the container prices because Coastal Corp is mainly an export-oriented business. So rising in container prices, which lead to the less profit and less margins. And also we can see the EBITDA is going stable from 22 to 23, but PAT margins are going down. So moving on to the next is like the shareholding pattern. The shareholding pattern, the promoters have good skin in the game and FY is holding sufficient, but there are no DI present and no market investors also. So we may be very early in it, but it's okay. The public holdings are getting reduced from 2022 to 2023. So here is the Coastal Corp, all the clientages of the Coastal Corp like A to Z James and Great American Seafood Imports. They are all the big names. They are mostly a 100% export-oriented business. So, and they have 95% contribution in the US market. So they mostly export to US. In the right photo, we can also see that in organic shrimp market, there's a growth from 2019 to 2029 for 7% an increase, which is fairly stable and a good growth opportunity for even coastal crops. So these are the these are the key strengths of the company. So they have a qualified management, and he was the managing director, which also looks to day-to-day operations of the company. Also, the geographical advantage is present in the aquaculture zone in Andhra Pradesh. She has 3 processing units, which are located in the prime aquaculture zone near the coastal area. So they also export frozen shrimps, import quantity and value-added products in USA and China. And the marine products export is also to get increased by USD 14 billion by 2025. Talking about the strengths of the company, CCL has 3 processing units, which are located in the prime aquaculture regions in Andhra Pradesh and Bay of Bengal, Kakinada regions. So they also export to 13 plus countries, USA, Europe, Canada, UAE, Saudi Arabia, which comprises of many ready-to-eat products. So as I've already said, it was a 100% export-oriented business, and they only export to USA, which is comprised of 95% of their government support by way of subsidies. So So let's talk about the triggers for future. So they have also set up a coastal biotech plant with internal manufacturing plant in Odisha, with the comprising debt to equity mix 80 to 20. and a surging consumption of seafood in developed and developing economies. So, a new shrimp processing facility at Harinda, Kalkutta, and Odisha is spread across 4.28 acres. Government also rolled improving practices to control the overfishing and protect the biodiversity. So we can also see the ethanol planning for the Coastal Corporation. They have set up a plan. The sales of shrimp through aquaculture production were estimated at USD 40.12 billion in 2020 and anticipated to reach USD 65.04 billion by 2030, growing at the fastest CAGR of 6.2%. Over the forecast period, aquaculture has ended a substantial increase in shrimp production over the years. Farmers can control factors such as water quality, temperature, and feed, resulting in higher yield than traditional fishing methods. Shrimp farming provides a controlled environment where factors like water quality, temperature, and feed can be optimized. So Indian farmers are doing it nicely, and they are most probably able to control the higher cost which have been incurred in 2021 and 22 mainly, and they will be get better by 2023. So the US shrimp market is also expected to increase by 5.6% in 2030. Talking about the global seafood industry, this I have taken from the Coastal Corp only. Between 1961 to 2016, global seafood consumption grew by 3.2%, outpacing even the meat, which is a good thing. And as we can see that the shrimps are mainly a good source of nutrition and everything. So it is also mainly used in dieting and all for various factors. Government across the world are implementing regulations placing limits on capture in order to curb overfishing and protecting biodiversity. Focus on increasing the area devoted to aquaculture. We can see from the picture that the aquaculture production by 2016 was 80,000, which is expected to grow in 2030 by 109,391. Also, there are many policy initiatives by the government for the aquaculture industry. Like the government provides subsidy in 3% in respect to exports by the micro, small, and medium enterprise, the MSME enterprises.
Devanshu, can you put in a full screen mode?
Yes, sir.
Not from beginning. Yeah, fine.
Next. So, sir, the risk for the company that the company was into shrimp business, but they have also set up that not plant, which is okay for them. But the over diversifying is a little bit of concern for them. And the geographical consideration this, CCL is only 100% export-oriented business, and 95% of the business is in the US. So if any changes in the US policy or any countervailing policy which are expected in future can lead to some disruption in the business. Or they are also in a very highly competitive industry. The seafood industry is exposed to intense competition as there are several small and large players. The players also face intense competition from Southeast Asian exporters, impacting the realization. The seafood export segment is marked by stringent regulations and quality requirements also. And also we have seen in the corona time that any disease or anything related to climate condition also is very bad for the shrimp industry. Shrimp farming being an agro commodity is exposed to climate condition. Production and raw material prices tend to fluctuate and may depend on the various of the nature. So, talking about the unrated diversification, the company has set up an ethanol plant, which is also good for the company, but it is leading to overdosing. They are not mostly focusing on the shrimp industry, which is and vulnerable to export incentives. International trade policy and policies CCL poverty is supported by the export incentives received from the gold. The gold replaces and merchandise exports from India schemes with the emission of duties and tax on export scheme in January 2021. So coming to the main thing is that the Equator thing. The US shrimp market has witnessed a significant turbulence because of the Equator shrimp trade practices. These practices including selling shrimps below the fair market value and have led to substantial financial distress not only to other countries, India and other countries, mainly for US. Because US had a very small shrimp industry, which was affected severely because of the dumping of shrimps from Ecuador. Many of the companies in US have to close down, and many filed petitions to US government about the thing for the Ecuador. So Ecuadorian shrimp exporters have been accused of selling their products at 15-20% below the fair market value price, which impacted many US companies, representing over 75% of local shrimp companies filed compared with US. The objective was to maintain a balance in the prices. Earlier also, we have seen that the shrimp prices have been very constant and not growing or but keep depreciating only by year to year. So it may be because of Ecuador. So the US government has put two duties in focus, and it may be passed in the future. So one is countervailing duties, which is for mainly in India, Indonesia, and Vietnam. These duties aim to contract any subsidy, like a diesel subsidy which we are getting from the government is for 3 to 4%. So US may pass a duty which will curb our 3 to 4% duty of India. But the anti-dumping duty is mainly on Ecuador because mainly for Ecuador and Indonesia. These duties are meant to contract the losses caused by selling ships at lower prices than the fair market value. Rate of duties. The anti-dumping duties are significantly higher, ranging around 30 to 50% compared to countervailing duties, which usually range from 2 to 5%. So the expected outcome is that the impact on Ecuador will be that the high rate of anti-dumping duties will lead to a destabilization of Ecuador's shrimp industry. And there's also disability in the political instability in Ecuador. Because of high inflation and economic struggling, many subsidy is revoked by the Ecuador government. Like the main subsidy was the diesel subsidy, which comprised of 10% in the value of the shrimps, which is revoked by the Ecuador government, or also to reduce the fiscal subsidy which the government was giving to Ecuador. Many will be revoked. So it can be, it will lead to the, so it will, तो वो मतलब आप बेच नहीं पाएंगे नीचे दाम में ज्यादातर. तो इससे there will be a stability in the price of the ships. And also in India, if there is a countervailing duty, it will be not so bad for India because we are into many ready-to-eat products and many value-to-add products. And in Ecuador, it is not possible because of the lack of manpower. The Ecuador markets are not, means they are mostly into raw shrimps, which are like, they are not into value-added products and ready-to-eat products. If they focus also in production of 50% production of value-added products, it will be a very challenging to them. So let us say that if the anti-dumping duties get passed, the Ecuador will face problem and it will lead to it may lead to rise in the shrimp prices, which can be beneficial for India. So the projection is like by the end of 2024, the shrimp sector is expected to recover, influenced by the reduced competition from Ecuador and potential market correction. Indian market influence. Indian shrimp stocks might start moving upward approximately 6 months prior to the event, anticipating market changes. We don't know as of now, but we think it may be revival for the sector because from 2 to 3 years there have been no changes in the shrimp prices and no benefits for the company. Even the higher shrimp feed prices lead to more downfall for the companies. So the current period may be present a favorable opportunity for investing in some stocks in the shrimp sector, while continuous market monitoring will lead to good developments. So coming on to technicals, like in weekly chart, there was a good pennant breakout, and now it's coming to retest. And we can also see MACD going for a dead crossover and RSI starting to cool off in weekly chart. While in the coming to a daily chart, it is very close to near retest, and the MACD is already gone for a dead crossover, and RSI is in approx 51. This is not the latest chart. It is of 2 to 3 days back, and I'm mostly done.
Okay, thanks, Devanshu. So I think the major thesis what you're trying to share is countervailing duty India might get, but the anti-dumping duty they might not get, while the other
Yes, I
countries.
know it's not very clear, the presentation, but
Yeah, so I think other countries might get anti-dumping duty and India may escape that. So that might turn the things in India's favor, to
yes,
summarize it. And on the other side, they might be also benefiting from the ethanol side, but could be some headwinds in the short term. So
yes,
this is, I think, what I understood overall. So
yes.
floor is open for question and answers if in case anyone
So,
has.
so fundamentally, the company is not so good because the net profit is also decreasing, but it may be a good turnaround for the company, I expect.
Past, we should not look actually. We need to see
Oh,
where the company is going in the future.
for future. Yes.
Yeah, I put up one question on what is the connection of this ethanol with this coastal foods.
So it's a diversification only. Maybe one can think of it's an unrelated diversification, or one can think of they are trying to stabilize their earnings, so more predictable earnings, and not dependent upon US or exports. So that could be one reason they think of, okay, let's go to the ethanol side.
No, is ethanol any connected to seafood? Like
No,
other than
nothing.
No.
It's a totally two different
total
divisions of the
completely different
company.
business. Okay.
Yeah.
Do they cultivate shrimps by themselves, or they get it from smaller vendors like that who cultivate them?
I think they have specific units to do it themselves and don't rely on vendors, because each of these units has to be approved by government, export-oriented units.
Okay.
And there the quality and all those things would be checked specifically. So I don't think they will rely on outsourcing.
Okay. And most of them, I think, is artificially cultivated only, not the naturally.
They mostly
Just
process by themselves. Everything from like fishing to shelling and skinning of the shrimps, and then packaging and exporting.
okay.
Coastal.
Fishing in the sense naturally, I mean, we get it from sea, right? That is one part, and we cultivate by providing the environment.
It's more cultivation.
Okay.
That's how you will get the volumes.
Okay. Thanks.
So, who are the peers for this company? Like
So
Avanti.
some time back, I also presented Apex Frozen Food. So they are the most competitive peers for Coastal Corp. So Coastal Corp, it's not planned maybe a killer for the company also in both sense. Like it may not get good also, it may get good also. But the mostly the best peer is Apex Frozen Food.
Fundamentally, it could be Apex Frozen, but Avanti Feeds is the one which has given the wealthy returns to the investors in 2010 to 2020 timeframe, right? It has become almost a 100 bagger there. So when the things will turn in their side, these have a lot of potential, basically, these kind of companies. So you might struggle for few quarters, few years, but once the things turn in their favor, they might become so big.
Avanti has done a lot of buybacks as well, I think.
Yeah.
Last 4 or 5 years, they have, they have significantly reduced the free float of the company.
So you need to track all three. I think Avanti, Coastal, and Apex. That way.
I'm invested in Avanti actually. It's a decent position for me.
Yeah. Okay. So, any other questions? Otherwise, we can move to the next one. So we'll take one more presentation and then we'll go for a break for the lunch, maybe.
Thank you everyone for supporting me.
Yeah. So yeah, you can
I
stop
know
sharing.
not a very good presentation, but
hey, nobody should underestimate themselves. I am consistently seeing these messages from people from yesterday. Don't underestimate yourself. Everyone has done whatever effort they have put. The idea is to get the company understanding, not panicky about how you're presenting. It's more about understanding the company.
Yes, sir, definitely.
Yeah, so you can stop sharing. Amar, if you're there, I think we can start with yours.
Yeah, Puneet.
Yeah. So we'll exactly break possibly at 1 p.m. So we'll try to see if we can finish by that time. Yeah, we can see your screen, Amar.
Okay, sounds good.
Yes.
So in a way, good. I'm presenting in the pre-lunch session instead of post-lunch. Post-lunch थोड़ा heavy हो जाता है, and if I drone on,
so post-lunch, what we'll do is we'll have those quizzes and those small things maybe to start with, and then do the presentations. Go ahead.
Yeah. So the stock I'm going to present today and going to talk about is GPIL, which is Godavari Power and Ispat Limited. It is from a cyclical industry, metals. So people might थोड़ा ऐसा ये होता है कि metals is a cyclical industry. Why are we going there and what are the returns we are looking at? But at the first slide itself on the right hand side, I have put some snapshot. Look at their ROC, look at their ROE, look at the debt. When I look at debt, it says 89.5 crores, but that is for a 10,000 crore market cap company. So it is almost negligible. Those are short term debts again, not long term debts. And one thing which I have not been able to capture on this screen is GPL has an excellent cash flow. And when I say excellent cash flow, on a yearly basis, almost 1,000 crore they are churning out as a cash flow, which kind of gives very heft to their balance sheet. Currently, they are 800 crores they have in cash. So we have to look from that perspective. Another data point which I want to throw is GPIL in the last 6 months, it has appreciated by 130%. So that is nothing to scoff about. That is something which did catch my eye. And my disclaimer here is I have been invested from a lower level. The only thing is I got a opportunity to present now. But GPIL I have been around like 500 odd levels. I have been invested around. CMP is around currently 750. So in the past, if it has a spurt of like 130%, why am I presenting on it now? Because I think the value is still on the table. PE, if you look at it, is just 12.4. PEG is 0.41. And then two things which I want to highlight on this slide. 5-year compounded sales growth is 18% and 3 years is 21%. Whereas if you look at profits, it is 31% for 5-year compounded growth and 3 years it is 67%. So by any prism you look at it, instead of it being belonging to the metals and mining and kind of a cyclical thing, but the numbers, they tell a different story. 29, and Chhattisgarh mein there is a Hira Group, which is into this mining and other things, and it is a flagship company. GPIL is the flagship company for the Hira Group. If I talk about business model of GPIL, two things stand out. One thing is like their foray into the steel industry. I'll talk about more in detail in further slide. And the second thing is power generation. It started as a captive, but then over a period of time, they have been investing into this power generation also. And good thing is it is into the renewables. So their power generation is more from a solar power and biomass, where they use rice husk for power generation. And now they have attained a certain scale where their power needs are to definitely met internally by their captive power plants. But they also have surplus, which now they are selling to the grid, to the Chhattisgarh government. I'll move on to the next slide. This slide kind of gives you a snapshot of like how their plants are located, and it's a very concentrated geography kind of thing, right? And how does it help GPIL? It helps GPIL because they are into iron ore mining, and they are also into the whole forward integration process where they kind of move on to the mild steel wires, which is the end product. In between, there will be 6-7 steps, and every steps like they have a stake in it, they have a good hold on it. And the fact that they are in a concentrated geography, it kind of saves up on the logistics and the freight cost and all. So they save up on that. So we talk about like the pelletization plant is there. Then we have the power plants, like I said, and there are the two main iron ore captive mines, which it's like towards the bottom of the screens. Moving on to the next slide. Here I wanted to give a kind of a brief snapshot of what are all the things which are GPIL is involved in and what is their utilization. This is the FY23 utilization which you are talking about. September 2023 numbers, because December 2023 numbers are not out yet. They will be declaring their results somewhere in first week of February. So we'll have to wait for that. But this number itself like talk a different story and the tailwinds which this company has got. So two captive iron ore mines, and their current capacity is around 3 megatons per annum, which they are already have a capex in plan to take it up to 6 MT per annum. Utilization was like here it is depicted as 85%, but September, if you look at it, it is almost like 90+% over there. Iron ore pellets. So before getting more deep into this, I would like to spend some time. So the first step is always going to be the iron ore mining, where they get the iron ore. This is a captive mine for them. So what happens is 85 to 90% of their iron ore requirements, it is met by this iron ore mines only. So why would I say 80-85%? Because they still need the way their business is and the end product being mild steel wires. In that whole process, they still require something, some iron ores which they kind of import, and that cost becomes a bit on the higher side. When I say higher, compared to the captive, it might be almost 3x. And to reduce that gap and to get away from that, that is where the capex has come, where they want to increase it from 3.05 metric ton to 6 metric. Second one, if you see iron ore pellets. Iron ore pellets, it's 97% utilization, and right now it is the biggest cash earner for GPIL. What are iron ore pellets? What happens is steel industry, they will require this iron ore pellets as a raw material, input raw material. What happens is iron ore mining after, what happens is it's a very fine kind of thing and mixed with sand and all. So there is a process, a beneficiation process they call it. What they do is take all this like fine sand kind of like iron ore, they do the chemical process, and there is a physical process where different reagents are involved in it, and they purify the iron contents. And for GPIL, the advantage is it is goes as high as 66 to 68%. On an industry standard, anything which is 55 to 65%, is a very good input source material, and it is very highly recognized by the industry, and this is in demand. But the fact that GPL has cracked that 65% barrier and they go up to 68% purity of iron in the iron ore pellets, their pellet products are very much in demand, and the market pays them a premium for those. When I say premium, the cost is like almost like 1,000 to 1,500 in excess of what are the market rates per ton. So that is where GPL scores, and they have a big market share over there. And this is a certain proprietary steps which is individual to them. It's a kind of a USP for them, and that is the differentiator. Then in the process, like there are other things which we talk about, like sponge iron. Sponge iron is again what happens. They use a direct reducing iron kind of process, and all these materials, like we talk about sponge iron, steel billets, or like MS rounds, this go eventually into the production of the steel. Where would we using the iron pellets? Iron pellets are like used for used in the blast furnaces. In the blast furnaces, because of the purity and the fact that they are not fine and they are a lumpy kind of thing and with a high iron content, it helps the speeden up the process and also make it a more pure kind of thing. And maximum utilization in the furnace, it will come from the iron ore pellets. So it's a very key ingredient for any of the steel industries. So I'll move on to the next slide. This slide talks about a very simplistic structure in the sense how the GPL has structured its business. But this simplistic structure has come after they faced a setback sometime in 2017. In the next two slides, I will talk about it. So in the 2017, what happens? The way business grows over a period of time and organically, inorganically, what had happened was there were too many subsidiaries and too many system concerns which were with GPIL. And 2017, they faced a setback in the sense because of their investment and because of the high capex, and the forward integration and backward integration was not in place. What happened was GPL ended up defaulting on a bank loans. So that was a dark period for them. When I say defaulted, means it, the worst case scenario will be they will have to declare bankruptcy. The promoters avoided the worst case scenario there by investing their own money into the company. They subscribed to QIP for themselves. The promoter subscribed and they invested around 31 crores rupees. And that is where they kind of got away from that. But since that setback was there, one thing they made very clear, like this is where we many times like retail investors have this question, right? How do we gauge the quality of the management? How do we believe them? What is their stake or what is their intention? This particular example for me, per se, it was a very good example of like management proactiveness. And at the same time, once the worst case scenario happened, what were their actions? How did they execute their plans and how did they get back on track? Like they say, there is a famous cliche dialogue, right? You fall down like 7 times, but then you get back 8 times. And that is how you reach your end goal. This is what happened. 2017 was their dark hour, but then they learned from that mistake. What they did was they put in a plan in place. First step was like obviously infusion of cash by the promoters in the company. Second thing, they started getting rid of non-core assets. Whatever non-core assets were there, there were no two thoughts. They just sold it off, used the money, reinvested it in the company. And probably I'm a bit running ahead, but then what happened is the iron ore prices also started peaking out around 2019 and 2020. So 2020, when it started peaking, that also helped and they give the right kind of impetus and GPL got back into track. 2017, they almost defaulted on the debt. And if you look at it today, their net debt is almost nil. And the cash is like 800 crores on the books. Cash flow is about like 1,000 crore plus on a consistent annual basis. So this is the turnaround which they have shown. In further slides, I will talk about like why how the turnaround came into play and why there are certain tailwinds which GPIL has got, and which is why I have picked this company to present today. In this slide, one more thing which I would like to highlight. On the right hand side, you see there are like 3 joint ventures. Somewhere around that time only, there were 3 coal mines which were given by Government of India. This was a joint venture with different companies, but GPIL was part of the ownership where they got these coal mines. But unfortunately, this never got off to a good start, in the sense it never started per se. It got allocation, the mining, they won it, but because it was a joint venture and it with different promoters and partners, it never got off the ground. That's why it's in a different shade. There is no cash flow there from there. And right now, if you look at it, we might as well ignore it. Those coal mines, they don't have any captive coal mines right now, because since there was inactivity for so long, the government has revoked those rights again. So these 3 again, if you look at it in the gray shade, this is kind of non-existent for the company. In the books, they were there. There were some investment, but those have been kind of written off. Okay, so here we'll talk about, I have already spoken about certain things, but I'll talk a bit more in detail here. Right at the start, they have captive iron ore mines, right? So with about like 165 million ton reserves. And what happens is this captive iron ore mines, it depends on your execution as to like how, if you want to scale the output of those mines and all, there will be investment and capex required, obviously, but then you can always take it further. So that is where it is coming, like it is 3.05 million ton per annum, which they are doing a capex to take it, almost double it to 6.7 million ton per annum by FY24. But then when we say FY24, there will obviously be on the mining sector, there are too many kind of like approvals required from the government, and it's a time consuming process. So first thing is they need to get an approval from the government. The fact that there were elections in Chhattisgarh, that also kind of delayed the process. But now that the elections results have been declared, there is a stable government in Chhattisgarh. By March quarter end, they are expecting this approval to be in place. Once they get the approval, it's usually around 12 to 15 months process where they will start getting the output. So it's a long path, basically 1.5 years away. But this is where they are going. The second point, I have already told that they are very kind of like they are forward integrated as well as backward integrated. When I say backward integrated, raw material is captive iron ore mines, they have their own. They have in between all the 6-7 steps, all processes, they are doing it in terms of pellets, in terms of sponge irons, billets, and eventually getting into the mild steel wires, right, which is the final output product. So that is happening. High grade pellets, which I already talked about, and they earn premium of 1,000 to 1,500 per ton above the market price. Because of the business wind, because of the tailwinds. When I talk about tailwinds, what do I mean? So if we look at it, since we all are invested into the markets and interested in that, we all know that currently there is an infrastructure boom going on. It is backed by government policies. And when I say infra boom, is that it is across the sectors, be it construction, be it roads, be it railways. Whenever these sectors have to do good, these are asset heavy businesses, and then we will need steel, we will need cement, and those are all the sectors which are going to benefit from that. GPIL, fortunately, belongs to that metal sector, and it is part of the beneficiary group. So next, at least like 5 years, so we can see that there is a runway, which if executed efficiently, things will be good. The tailwinds are there, the groundwork is there. The only thing is we need an execution in the right play and the global macros to support. So based on that, there is a strong growth plan. And GPIL is already done some of the capex, and it is on to the verge of like realizing what they intended out to do. But there are certain other capexes which are going to come into the future based on the approval from the government. I kind of alluded to this on the 0.5 net cash balance sheet. It has gone from heavy debt to net zero debt, and in fact, it is cash surplus on the balance sheet now. Simplified group structure, we talked about it, part of the restructuring process. They let go of all their non-core assets. So now it's a very clean hierarchy if you look at it from the company and the management perspective. These 2 points, they are important more from how to conduct business and like kind of get the good favorable points more from the ESG and the reducing carbon footprint. So here also the focus is that GPL is doing good on those fronts. So part of the capex I talked about it, right? The part of the capex already has been done, and part of the capex it is on the annual, in the sense that they are going to make it. They are waiting for the right kind of approvals. So if we look at it, the first one, GPL Khairagar, there is another 30 megawatt capacity, which was initially 25 megawatts. Now they are ramping it up to 30 megawatts. Total capex was 125, out of which 107 is already done, and balance is 18, which will be in due process, and they will realize this. So similarly, if we, the key thing to look here is in the capex column, in the total, what is the capex which is required, what is already been incurred. And since this slide becomes important, because that is where the operating leverage is kicking in for GPIL. Because they have already spent, in the sense that they had certain goals. This is what we want to achieve in terms of debottlenecking or ramping up our power needs, those kind of things. They have already spent the money. Now is the time when that money, when the execution comes onto the ground, it becomes reality, and they will start reaping the benefits. And once they start reaping the benefits, there is no incremental cost, because the cost has already upfront been paid by GPIL. It is already spent. जो भी अभी benefits आने वाला है, it is directly going to contribute to the bottom line. And that is where the excellent financial ratios which I showed in the first slide, they are going to get improved upon. वो वहां से बढ़ना ही है, मतलब there is no further capex required, no further money involved, and they are going to reap the benefits of the seeds which they have sown about like 2-3 quarters ago. So this is what I wanted to convey on this slide, the operating leverage which JPL has in its favor. Moving on to the next slide, this is something which is going to come in the next 12 to 18 months. So iron ore mining, they are ramping it up from 2.35 million tons per annum to 3.65. So eventually it will become 6 million tons. This is the iron ore beneficiation plant. This beneficiation is a process where what they do is very raw iron ore. Once it's mined, it is not ready for consumption. It has to go through certain process, chemical process, physical process, where they reduce the impurities, make it more pure, make it more into a lumpy format for usage and now. So this beneficiation plant is, again, it's already 6 and they want to increase it they want to double it, because like I said, palletization is the process which is the major cash earner for them. And this beneficiation plant is the one which will help like taking the raw iron ore mine and getting into a Fe-rich pellets, and that too above the industry standards. So this time frame they are looking at like 15 months, and capex will be around 200. If you look at it overall, if you look at from here, around like 3,500 crore capex is there, but 800 crores they already have on the book as a cash surplus. And cash flows, if we look at it, they are like 1,000 to 1,200. That is where they are hitting the strike rate. So yearly cash flow is around about 1,000 crores. So 800 crore का balance sheet में मेरे पास cash surplus है, and I have like about 1,000, 1,200 cash flow. So basically, what I'm trying to say is, whatever they are targeting over here, it is all going to be done from the internal accruals and the cash flow from operations. There is, just looking at this, there is no need to go for a further debt. So that becomes a very big advantage, because like since you are not taking that, you are cash rich and your cash flow is supporting your business, at a minimal cost, you ramp up your capacities. So the pain becomes that much less. And once you achieve that capex and your aims are kind of like executed, then you start reaping the benefits. Correct? So I'll move on to this. This is the part where I'll talk about like the consolidated net debt, right? 2017, which I briefly alluded to, almost 2,000 crores. वो time पे तो they were like what? I thought 4,000 crores का company था, market cap था. So if your market cap is 4,000 crores and like 2,000 crores on your debt on your books, it's almost 50%. And they went into a spiral there. Like I said, this was a dark period for them. That was the adversity. The management, with their acumen and due diligence and the right intention, they turned around the story. And you can look across the years. Now look at these figures, 22, 23, and the projected one, 791. This is 800 crores cash which I'm talking about. Getting from here to here, that impresses. In the sense that the management has the right intention, they are efficient. When I talk about the management, the three founders who are there here, Agrawal and I forget the first one's name, all three have 40 plus years of experience in this industry. That also kind of gives the confidence, and the actual execution, how it turned out. So that too kind of ramps up your confidence sky high. Another advantage which GPI has. So if you look at it, what happens if you are like backward integrated? When I say backward integrated, means you have control over your raw materials, which is iron ore in this case. Since they have two iron ore mines, 80-90% is already being made by the iron ore mines only. So look at the price differences. On an average, if you look at it, 2,900, 2,700, this is the captive or landed cost, because it's a captive mine for them. If the same thing they had to do, get it from the market, it's more than double. 6,400, 6,000. At peak, it was 7,300. When it is 7,300 per ton, and from your captive mine, you are getting at 2,800. So this itself gives a big moat to GPL compared to its peers. Why? Because their landed cost becomes so less that they can price their final output products so attractively and at a much lower price compared to the peers. Peers, if they don't have the captive mines, they cannot kind of like compete here. Somebody has to have the iron ore mines along with them, and then only they can compete here. Otherwise, like, it's a no-brainer that GPL is going to take the major market share. Some figure which is kind of like extension of what I described in the previous slide. So today, if you look at it, global iron ore prices touched 133, and they are hovering around 133 USD per ton on the international global market, and this has been in the uprise. So if we look at it, the past 6 to 8 months, it is in the range of 100 to 140. That is where it is kind of moving on to. One word of caution here, though, China is facing lots of pressure. Why? Because steel industry, if it has to do good, then the economy has to do good, and the economy has to do good means some of its core industries like real estate, the infra boom, it has to be in place. Because demand वहां से आ रहा है. If the demand is not there, obviously, then the things are going to go into a tailspin. And China currently, unfortunately, is in that place. In the China, there is a huge real estate was the biggest driver for them, for their economy. And it is in doldrums right now. The top 3 real estate firms, they have declared bankruptcy. And that is where China is feeling pressure from that perspective. And since China controls almost like 40% of steel market globally. So all global consumption steel ka agar dekhenge, to 40% is used by China. And if China is going into tailspin, then it will have repercussions in globally also. And India will not be aloof from that. It will also feel the heat. And that is where GPIL might feel the heat. When I say might feel the heat, the iron ore prices kind of get capped. So it will be kind of like in $120 per ton, USD per ton is what it will get capped at. It cannot go unhindered. If we are just looking at domestic, the way the boom is happening in infra construction and all, iron ore being the raw material for that, it is bound to increase, right? Because the demand is there. So domestic we are not worried. Domestic GPL will do very good and they will have good numbers there. Internationally, because of the way China is behaving, it will get curtailed a bit. In spite of that, it is 133 USD per ton. At the most, it can come down and be stabilized around 120 per ton, which still is a good price, because if you look at the start of the year, it was around about 80 USD per ton. So from that perspective, we are still doing good, and this all contribute to the top line and bottom line of GPI. Below, if you look at domestic market, like I told, the pallets are the one which are the differentiation for iron ore pallets for GPIL. The price kind of So the price kind of started from 3,660 per ton in Jan, went all the way to 4,460, and eventually it landed up around 10,000 per ton, which is the current scenario. So price itself, like अगर 3,000 से मेरा 10,000 हो रहा है, तो it is 3x the price of the iron ore. And the good thing over here is, in spite of all this, GPL doesn't sell its iron ore, whatever it mines, it doesn't. It is increasing, doubling the capacity, but it has no plans of selling iron ore in the domestic market. You would ask like why? Because the price has gone 3x. Then why is GPL not interested? Because GPL has forward integrated and value-added products will give him more margin. So iron ore, if you just mines iron ore and sells it in the domestic market, the margins are not that less. And on top of that, there will be like logistic cost, freight cost, and other thing. For example, international because of that Suez Canal crisis, those are creating prices where the freight costs are going sky high, right? And it becomes, after a point, it becomes unviable for the business. So that is where again the GPL management has shown their acumen, and they are not interested. They are not in the business of like mining iron ore and selling it either domestically or like overseas. They internally consume it. They go through that 7-step process where they convert the iron ore into pellets, then it convert into the sponge iron, billets, and so on, and eventually into the end product. And these are high margin products. And when they focus on this, their OPM automatically increases. That is what is happening. So this got repeated, is it? Yeah. Coming to the shareholding trend, as you see on the slide, almost 63%, approaching 64% is held by the promoter. Some of my retailer friends, like when I was discussing with them offline before, they say कि अरे quarter में like there has been a 4%, 5% sell off by the promoter. That is a red flag. Sometimes we have to go a bit deeper into it. Why was the selling happening, and what was the actual scenario? So here, like if you see across the quarters, they are very stable at 67%, and suddenly that's a 4-5% drop, and they'll end up at 63%, which is the current one. Here, what they have done is they have just kind of like grown the liquidity of the company, where they have not sold it off for their personal gains or anything, but they have had meetings with the HNI investors and all with the DIS, and they have offloaded certain stake to them. So that this is what it is. So when it is sold to the HNIs, it is not, I don't take it as a negative. That is how I will put it. So there is a slight blip over here, but then corresponding, if you look at it, FIIs and DIS, the percentage has gone up. So currently FIIs at 5.41%, DI at 2.09. So it is like almost 7. When we started, it was like around 4% or something. So yes, stocks have changed hand, but they are still with the stable investor. They are still with people with deep pocket money, and we are still good. This is what I wanted to highlight over here. These are just numbers where I'm saying what are the total outstanding shares, what are the percentage, and accordingly split across. And when we say that public has 29.23, again within this there are like many HNIs which are listed as public, but then very safely 10 to 13% is with them. So actual public, if you look at it, it is 15 to 16%, which is with retail, which augurs well, because then the float becomes a bit less. And when the float is less, stock prices tend to kind of like do an explosive move, right? If it is times are good, it will go up very significantly. If times are bad, it will, that's the con side. It will come down also significantly. But overall, if I look at it, shareholding trend, I think all positive over here. Zero pledge. The promoters haven't pledged any of their shares. So from that front also, we are clear and good. I will not spend much time here, but then if you look at it, this is just a financial number which I wanted to throw across the years, how it's shaping up. And if you see the trend sales, if I look at it, it started with 2,500 and it's a constant like up move only. In FY23, it is 575. In H1 FY24, we are already at 2006. So we will exceed this also. This is how it is happening. Same way with like profit after tax from 215, it keeps on kind of moving and it comes to 488. This is the half year thing which you are talking. Now coming to the SWOT analysis, it will be more of a summary kind of thing, but then we'll just go through this on the strength side, integrated operations. So integrated operations, what happens because of that, they are the lowest cost player. Why? Because their input raw material iron ore, it's captive. Whatever power they are going to use, it's a captive power plant, so they are not spending on that. So another thing, like I said, no, non-core assets, they are kind of like hiving off and kind of focusing more onto the business. The management in the con call or anything hasn't said anything about like current. They have 120 megawatts solar plant and the biomass power plant, and they have another 55 megawatt upcoming. Today, if they want to kind of sell it and put it on the block, that 120 megawatts solar plant, it is one of the best in the industry, and that itself will give them 1000 plus crores of cash. It's already a cash-rich company, but if they want to focus on the core and high of that power plant also, that is what they will earn. That is kind of an asset which they have in hand, 1000 plus crores. At this point of time, it contributes directly to the bottom line because they are not spending on any power expenses and all. So this integrated option operation, that is where it is coming up. It is covered both on the forward side as well as the backward side. After the 2017 debacle, it's a more of a cash flow driven growth strategy for them. It's a debt free. These are all the strengths. Operating leverage, I already talked about you, right? The first phase of capex, it's done. The numbers are yet to show on the book. The moment they start showing up on the book, which should be from April quarter onwards, then the financial ratios further will get a boost shot in that. The numbers already are good if you look from a ROE, ROCE perspective, but they are going to get a upward revision. Coming to the weakness, end of the day, it belongs to a cyclical sector, right? We talk about steel, metals. If the economy is doing good, these sectors will do good. Since it's a cyclical thing, once we invest in it, we need to monitor the quarterly results very closely. Anything data shows like that is something which is going to go amiss, then we need to have a very tight stop loss and the monitoring has to be done. We cannot just put it that way, it's a long-term story, we will buy and hold. No, cyclical story, if you buy and hold, at times it will surprise you on the negative side and it will be a setback. So look at the technical charts, look at the fundamental aspect of it, always monitor, ensure that quarterly results are being followed and all. And once you do that, we will be in good hands because cyclical stocks, when you do the right entry and ride the cycle, up cycle, they will make money for you and they will make crazy money for you. But then the thing is, only caveat is the retail investor has to be very diligent and ensure that at the first inkling of a noise or something going amiss, they need to take an action, opt out of it. That is how I will put it. Another weakness is like natural calamities, for example, extended monsoon. End of the day, it is a mining sector, right? So if they are mining, agar barish ho gaya, there are chances that the mines will get flooded. If the mines get flooded, that operation will be hampered. In fact, that happened in this year, FY23, last monsoon. So they have faced some certain issues over there. But that is simply means one cannot get over it. It is what it is and it is going to happen. It is a known norm. So we just provision for it. On the opportunity side, we talked about it, industry sector tailwinds. When I say industry sector tailwinds, like I said, government-backed policies are there. Government is putting money where its mouth is investing into the various themes like infra boom, construction boom, railways, and all those kind of, even steel sector is having tailwinds. All this kind of benefits GPIL. Second point we talk about it, chance to have higher operating performance because scale of operation increases and volume growth supporting high capacity utilization, right? All this contribute to the bottom line. Why I'm talking about volume growth? Because they have capex plan in our place already, 3,500, where across different points, the steel, the iron ore pelletization, they are increasing the capacity. Iron ore beneficiation process, they are ramping up the capacity. In fact, one thing which I didn't capture on the slide, by 27 estimated to 2027 they are coming, they have already plans, they already made provision for it and they're going towards it. They are coming up with a integrated steel plant that kind of will complete the story in the sense that Today we are stopping at the process where our final output product is mild steel wires. But once the steel integrated steel plant comes into play, they take it one step further, because then the value added product will gain more margin for them. So that is also on the cards. Talking about threats, end of the day, if we talk about mining, you are totally dependent on government regulation. When I say that, for one mine, if you want to open from scratch, there are almost like 36 odd approvals that you need, including environment and so many other things, right? So you can look at it as a threat, but you can also look at it that though iron ore plant mere paas already hai, so that becomes a moat now, because any other new entrant, it will have to go through that grind. But government also can go and change their decisions, or they can put a cap on the profits you can have, those kind of things, right? So those are the things. That's why on the threat I have put government regulations. New plant, if they want to put, they need environment clearance, right? So environment clearance का अभी देखेंगे तो they want to increase the iron ore, double the iron ore mining capacity. For past 6 months they are just stuck because Chhattisgarh was going through its own process of elections and getting a stable government in place. So 6 months though, it was nothing to do with the company and how they execute things. It got lagged by 6 months because of the way government works. So that becomes one of the threat. Increased competition always is a threat in any industry. Third one, I would put it more seriously, because if China goes into a tailspin globally, if that makes a noise, then the demand suddenly can, we don't know, right? China is one factor. Another factor is, suppose this, I'm like just putting my thinking hat on and like assuming USA, like if it suddenly changes its tracks on the interest rates, recession hits finally, which we were fearing, the whole world goes into a tumble. Then if whole world goes into a tumble, India will follow. Means it cannot stay alone, right? So subdued demand hoga. That is more risky for me. Why? Because management looking at with their judgment and with the favorable tailwinds and all, they are going with aggressive capex. पता चला capex कर लिया, demand गायब हो गया. Now they what operating leverage they were getting, it will turn negative into operating leverage. At this point of, I don't think that is going to happen. But then from a risk perspective, that scenario will always be there. So we have to keep that in mind. I'll move on to the next slide. This is my technical analysis chart on it. If you look at it, I am looking at GPL chart on a weekly time frame, and I have used Heiken Ashi. Puneet has got me addicted to this Heiken Ashi chart now. I find it much more better for spotting the trend rather than candlestick, because candlestick mein noise hota hai. So if I look at the chart, the trend is very clear. During the period where there was a turmoil, you can see this rectangular box, right? This was the time where GPL was doing the time-wise consolidation. A range mein tha. It was not doing anything, and this is almost like 3+ years, 3.5 years, I think. 3.5 years, it got stuck in this range. And then after that, now suddenly there is a breakout of this range, and that breakout is with excellent volumes. If you look at it, it's above average and it is consistent. And you look at the chart now, from this particular point onwards, it's distinctly in stage 2. And the way things, I have discussed things, certain things which I have mentioned, and the way things might materialize going ahead, I don't see this ending pretty soon. This is going to have its run. And I augur good things for it. At least the chart, my interpretation is that way. Even if the parallel lines like the channel, if you look at it, even though GPL is at the touching the upward channel of the parallel channel. But then what is happening if we look in multiple years also, this is an uncharted territory for GPL. This is a blue sky zone. So once you have a blue sky zone, there is no clear resistance to hold back the stock. If the fundamentals are there, execution are there, and the sentiment is good, which is represented by this volume here. And below, if you see, this is the RSI relative strength. It is with respect to mid cap. Since it's a 10,000 market cap company, I have compared it with a Nifty mid cap. Throughout, if you look at it, it's been green. It's outbeating the mid cap index. All this kind of from the technical analysis also, it kind of supports. So from when I look at any stock, I kind of like to do a bottom up approach, and I will look from a fundamental analysis perspective first. Fundamental जगह पे बैठ गए तो then I will come to the technical analysis part and see कि whether those are in favor and supporting the thesis which I'm looking at. Yes, they are, because like I said, it has broken out this rectangular range. It is into stage 2. It is having excellent volumes. If we look at this, there is a golden crossover somewhere here in start of 2023. And once that golden crossover has happened, after that, it has not come down. It is still continuing. So looking at this, I still think we are in good hands. The stock still has a long runway. And all other factors considering, I think this is a good bet. Having said that, like I said, my buying price has been around 500 levels. Currently, CMP is 750, which is already 50% up. So take that into consideration, do your due diligence, and then we can take it from there. This is my conclusion slide, which is kind of a rehash, like certain things. 15 slides we have gone through. I just want to capture all those things which are in favor of GPIL so that it's a revision kind of thing. Operating leverage definitely is going to kick in here. There's a strong chance of J-curve growth. Because majority of the capex expense has already been undertaken. Second part of capex, yes, it has to be done, but like I said, they have cash in books, they have excellent cash flows, so everything is going to be done internal accrual se hi. So operating leverage definitely is playing out in GPL right now, and that will continue for certain time. And after 12-15 months, if they achieve what they are planning to do with the new capex, that will be the second set of operating leverage which will kick in. So that also gives me comfort कि मेरा 4-5 साल का तो runway बन गया है. This is what I'm looking at it. My disclaimer here again, definitely a cyclical business. We should play it like one. It is not a buy and hold stock. In a decade cyclical stock में होता है कि they start hitting the upcycle, you get into the start period, ride the upcycle, and at first sign of trouble, you book out. That is how you play cyclical stocks, and that is how one needs to do here also. You have your exit criteria in place. If not, getting trapped chances will be very high. This is the tailwind which I'm talking about. Government policy back push for infra, construction, railways, roads, renewables. All are having serious tailwinds. And in subka beneficiary, GPL will be in a certain way because at the end of the day, it is contributing towards the steel and which will be the major raw metal for all other sectors. This is the biggest point in favor of GPL, which is a mode from its peer. When I say peer, like what I'm looking at is the peers will be Sam Metallics is one. It is an excellent stock, another pick of mine. But between Sam Metallics and GPL, I like GPL better, and hence I picked it for presentation. But then when I look at any sector which is kind of booming, I kind of try to, agar wo sector cyclical jaisa hai, ya certain things which I don't understand fully, then I go by a basket approach. In this basket approach, I have GPIL, I have Sam Metallic. I haven't got at another stock. I'm forgetting Sandur Manganese. Sandur Manganese is very good, but then what happened in between? It gave a very liberal bonus, and it simply ran away. So I couldn't catch it. वो valuation में थोड़ा मेरे लिए आगे भाग गया. But when I look from the concept perspective and the forward integration background integration perspective, I still find GPL better than all those things. So my basket will have like this 3-4 things, but GPL is where we concentrate on. Why? Because it's a low cost iron ore producer, primarily due to its unique advantage of this point I haven't mentioned before. So what has happened? This mine which GPIL has, they have got this mining rights till 2057. So 2057 is huge. मतलब अभी तो हम लोग 23 में, so we are talking about 35 years more. So they have got the rights and it will be with them. And this is under old mines and mineral development regulation. What does that mean? Under this regime, GPL, this is a typo, sorry. GPL is exempt from paying any premiums on the iron ore mines. क्यों? क्योंकि 2020 से पहले का माइनिंग है ये, राइट्स दिया हुआ है, तो उसमें they don't have to pay extra premium to the government. See, government end of the day, it also wants revenue, right? So when it gives rights, when it sells out the auctions of the mining rights, what it says is whatever is your sales, a part of the sales will come to the government. And in the new regime, it is going to be as high as like 20-30% extra will be going to the government. So if we look at like some of the other players like JSW Steel, Tata Steel, Their contract is expiring somewhere around 2033, I believe. 2033 is where the next round of auctioning of the mining right happens. First thing, it brings uncertainty into the system. Why? Suppose Tata Steel has like certain captive mines. JSW, this is, I'm just using assumption and supposing like की hypothesis ऐसा है. This is how it can turn out. Auction में JSW Steel ने ज़्यादा अगर bid कर लिया, तो then it will take off those mines off the hands of Tata Steel. That fear, that risk is there, that fear is there. Second thing is, with the new mining right auctions, a certain part of the sales, it goes back to the government as part of a tax. Till to 2057, GPL is exempt from all those things, and that is another big mode for it. That's why it becomes the lowest cost iron producer in India, right? This part I already mentioned, international market, we will have to closely monitor how China is recovering from its, how do I put it, a dull scenario in the steel industry, let's put it that way. And the second thing is global macro mein, how US fares next year in terms of rate cuts and inflation. Those things are out of our hand, but those are the things which we should consider because it will impact our company too. It will impact us too. With that, I think this is the conclusion slide. So that's end of my presentation. Now open for questions.
Great presentation, Amar.
Thanks, Puneet.
Amar, I just wanted to ask, like, Shyam Metal, they don't have any mines with them. Like, they do have 2 mines in Godavari.
Mitesh, I think I'm not able to hear you clearly.
Yeah, it was. I kind of got a gist. Is he asking that Shyam Metallics doesn't have mine?
Yes, Shyam Metal don't own any mines, right?
Yeah, they don't. And that's why I said, no, I like Sam Metallics. But then you give me GPL and Sam Metallics. Because of the reason which I presented, I will favor GPL. GPL थोड़ा 19-20 में GPL 20 हो जाता है and Sam Metallics थोड़ा नीचे रह जाता है. Sam Metallics by itself is a good company. Its return ratios are also very good. And it is also a beneficiary of this boom, right? So
yes,
if you are going to make a basket of metals, then obviously Sandur Manganese, Sam Metallics, and there is a very small cap or macro cap kind of the Sarthak metals. Those are the things which you can look at. These are the 4 companies which we can look at. But then for me, GPL becomes my biggest allocation because of the factors which I mentioned.
and if the world, if the China, this thing, 3 companies are bankrupt, but
This is
world,
Mitesh, is it?
yes, yes.
Mitesh, can you come near to the mic? Yeah, I'm very having a hard time like listening to you.
Okay, now you can hear me. Hello.
Not much. I will concentrate more. Yeah, please go ahead.
So just wanted to ask, but China का वो slow down हो रहा है, but world में there would be more of manufacturing. So India के पास मतलब वो orders आएंगे.
Yeah. Today, if you look at it, like I said, China almost has a 40% steel production of the global. तो China का खुद का scale मतलब domestic consumption ही उसका इतना है कि it becomes the biggest player, right? But in the steel industry, if you look at it, after China, India is the second one globally also. तो अगर चाइना में डोल्ट्रम है, and today what is happening ना, चाइना का आयरन ओर का अगर ये देखोगे, डिपॉजिट्स देखोगे ना, the reserve iron ores, right? It is at a 7-year low. So the fact that it is at a 7-year low means it cannot export it to others, and that becomes an opportunity for Indian players. क्योंकि वो नहीं कर रहा है तो then India will go China +1 यहाँ पे भी play करेगा. India is already the second largest steel producer in India. उसमें मतलब scale है उसको और heft है.
तो फिर हम लोग so we can be the one, मतलब we can control the price, international price by any chance if the China is getting.
When you say control ना, the moment you do global, अभी समझो मेरे को अगर इंडिया से भेजना है तो then obviously the freight cost will be the major contributor to my profit loss scenario, right? अब वो स्यूज कैलन का इतना कंट्रोवर्सी चल रहा है वहां पे, people are like this is funny, but it's like a pirate kind of coming and looting your goods, right? They are bombing the ships and merchant ships, man. And because of all those nights, what is happening is the price has skyrocketed like anything. अब तुम आयरन ओर का समझो, आई एम जस्ट थ्रोइंग नंबर्स, आई डोंट नो, आई एम जस्ट मेकिंग थिंग्स अप. 100 रुपए में आयरन ओर तुम बेचना चाहते हो, उसमें तुमको 20 रुपया तुमको फ्राइट कॉस्ट लगता था कि ग्लोबल का, और वो 20 रुपया बढ़ के 50 हो गया, तो इट हैज हिट योर बॉटम लाइन, नो?
Totally.
Yeah, so that noise is there. That noise, it will get sorted out. It will take time.
Okay, just for
But
the
India,
future
yes, definitely
perspective.
has that
हाँ,
China Plus wala opportunity यहाँ पे भी आएगा,
if it
and
plays out.
Indian steel producer will come into play.
Okay, okay. Thank you so much, Amar bhai.
Yeah, yeah.
Amar, great presentation. Thank you. Can you hear me clearly?
Yeah, yeah, loud and clear.
Yeah. Quick question. Like you showed
One
the
thing,
technical.
just one thing. Since I'm in the presentation mode, I don't know who is speaking. Who is this?
I'm Rajesh.
Hey, Rajesh, hi. Go ahead.
Hi. Yeah. So my question is like not with respect to the company itself, but in the technical analysis, you showed us a chart and you said like you will be using that mostly because candlestick has more noise to it. So what is this chart? Can you explain if it's okay? Can you explain to us what we are looking here?
This is one of the see, by default, what we do is we go to the. Puneet, we have time. Yeah, I will jump on to trading view for just 2 minutes more.
Let me explain that actually. So, Rajesh,
Yeah.
what happens is in a normal candlestick pattern that is based on open, high, low, and close, while the Heiken-Nishi candle starts with the middle of that. Opening is in the middle. So what it does is just try to cancel the noise. So it is more about how you are comfortable with, because it will not, current chart in Heiken-Nishi will not reflect the current price because it is starting from the middle of the previous candle. So the current candle might not reflect to the exact CMP. So you have to be comfortable using this. But what Amar is highlighting is if you go from like June to maybe September, there are almost green candles, while in a normal chart there could be green and red. So we get confused with, okay, why it is green, why it is red, should we buy, should we sell, what decisions we take. Here in this kind of a chart, okay, as long as it is green, you might want to keep holding it until the trend changes. So that's what Heiken-Nishi is. I think you can Google more on this concept as such. And I hope I have given you the basics of it.
Yeah. Thanks, Puneet. Thank you, Amar.
Yeah, thanks, Rajesh. Any more questions? Or are we ready for lunch?
Yeah, so what I'm just thinking is let's break for the lunch, come back by possibly 45 minutes should be good enough. I think people need break. So 45 minutes, and then we may start with your question and answers maybe further from the morning session. One small audience time and then go to the presentations.
Yeah, we'll do.
Okay.
Time-wise, so we are doing good today, right?
Yes, good.
Cool.
Okay, guys, let's meet up around 1:55. Okay, so that we need 5 minutes of time to just start it up.
Thanks all.
Okay.
I'll end the sharing now.